Yo, what's up? Good morning. You know what I need to do? I need to make me one of those, some AI music. That way I don't get copyright strike for being like, putting regular music on. YouTube is always angry at me for that. You know, we need some like AI song generator. I'm gonna make you guys, we have a contest, like who can make the best. Oh, that'd be a great idea. Maybe I'll turn it into a contest. Whoever can make the best rocket scooter themed trading songs, I'll give out some prizes or something. Let's go. Good day, good day. What's up? Let's see. Smash that like button, friends. Is it weird without music though? That's my thought. Show me, is it strange to have like no background noise at all? Well, I'm traveling, so my laptop was like choking up yet. I have a really good laptop, but it was choking up when I was trying to run YouTube, Zoom, all that stuff together. So, just so that doesn't happen again. Whenever I get back to town, we'll be back to normal. You could turn on background noise if needed. There you go. Background music is soothing. Yeah. Let me see if I can. I have a theory that YouTube just hates you if you play music that gets a copyright strike. But then again, who cares? Let's try this. So you can't find me a new. Okay, I'm gonna pick a random playlist. Let's see what's on here. Let's see if we like it. Let's see what kind of music it is. I don't hate it. Background music is soothing. Okay, okay. All right, get my coffee ready. CPI came out, had a little bit of a burp. Let's take a look at what the S&P did. 6,002, 6,030. Barely spanned a risk interval. That was nothing. We traded all night. Tapped MHP. You guys see that? Easy peasy. No trades for me. Market's been looking pretty good though. All right, so PSA, as we told everybody yesterday, we have a patch coming out, big patch on the platform. We're fixing a lot of the stuff that we've been working on, especially like connections. Like we've grown very big, very quickly, and we've kind of exhausted our infrastructure faster than we thought. But we found some things that can help out. And what we teach you guys in the Zoom yesterday what's going on. So if you use Rocket Seer platform, there's a couple things I want you to do to make it easy on your life. Go to the scanner, and I'll repeat this again. Click Add. Turn all of the things off so that you're not using the scanner. Number one, the scanner, since it's downloading mountains of information through the socket, just turn it off, and then you'll have a better experience if you're not using it. So we default it turned on with the strategy preloaded, kind of like to visually cue you guys, hey, there's a scanner here. But it's not necessary when everybody is pulling data into the platform they're not even using. It's kind of like what's congesting stuff. So number one, you guys, everyone understand? Can you hear me? You good? Go to scanner, take your strategies off if you're not using it. Don't use it unless you're gonna use it. So, and until the new patch comes out, these are gonna be some things everybody can do for like a better experience. What's up, Diego? Good morning, Andres. What's up, Vin? What's up, SB, Hepcat? You can turn off the whole scanner too. So basically, the scanner is not doing anything until you put a strategy in. So you can turn this stuff off, but this is all different. This is all different sockets. So everybody, do me a favor. If you buy a lifetime Market Security, you get lifetime trading view for free. Yeah, well, you get lifetime our platform for free, which includes trading views charting. So it's not trading view, but we built ours off of trading views charts. So if you use trading views charts, yes. And actually we built a coding language called Rocket Script, which is similar to Pine Script. And that's actually releasing 2 patches from now, 2 big patches where you'll be able to code your own indicators and stuff using our coding language. Be very similar to Pine Script. So essentially, Robert, to answer your question, yeah, you get this for life. You don't have to pay for trading view anymore. All right, so here's some quick instructions for you guys. Click scanner. The add button is how you add a strategy. Turn all your strategies off and hit close. What's been happening is that the scanner, for whatever reason of us growing so big, I mean, you guys have been here in the stream, and we used to have like 50 people watching the stream, 60 people watching the stream is most, we're just kind of like moderately growing. We've always been a big community, but now we get 250 people watching the stream. Or, our business is like doubled basically in the last month. So basically we've overloaded the system. So we're patching it such that everything's going to work faster and quicker and better. But in the meantime, here's some quick fixes, some hot fixes, ways to get to go. So what happens is the scanner is pulling in mountains of data because it's a grid. For instance, these 4 things right here, live, is your candle data. See how every second, 1 data point updates the actual price. Everything else is static on the chart. So the live is pulling in 1 piece of data every second. The scanner, however, is pulling in a grid of data. So like when you scan for a strategy, it'll give you like a list of hundreds of tickers and then all this information about it that all updates every second. So you have 100 tickers and 10 columns. You have 1,000 pieces of data updating every second rather than just 1. So the scanner is becoming overloaded because everybody basically is forced to use the scanner at the same time. So the thing is we had scanner default with the strategy. If you load up the platform and click scanner, it'll say liquidity map. or illiquidity pocket and yet data coming through. So everybody's opening the socket on the scanner, which is causing this to disconnect. I'm going to teach you guys something very quickly. I want you all to remember this. And we're going to test something out today as a group. I get all a couple hundreds of you to help me out with this. So when the market opens, liquidity maps take at least 30 seconds to 2 minutes to load up. Do not do anything during this time. We were looking at the logs, and there's like hundreds of people that are like spamming refresh and hitting F5 and stuff when the market opens. You don't need to do that because liquidity maps don't even start calculating until 30 seconds in. That's number one. It's hard coded. I coded it. I know the numbers. So leave everything alone and do absolutely nothing. It will pop up, I promise. But what's happening is that a lot of people are in that 30 seconds to 2 minutes spamming F5, which is congesting the network and reinitiating the scanner connection and re-pumping in those thousands of data points per user, which starts to congest the scanner, and then the scanner disconnects for some users. And then those users hit F5 and refresh, which disconnects other users, and then ultimately starts crashing other sockets. So here's a couple of pointers for you. Number one, don't do anything for 2 minutes. Number two, go to the scanner if you're not using it. Turn everything off. Click this add button, turn everything off. Number three, if you want your liquidity maps to pop up, never hit F5 on this platform. Oh my gosh, for the rest of your life, never do it. Click this button right here. This just reloads the liquidity map. When you click this button right here, it only reloads the liquidity map. If you hit F5 to refresh, it will refresh the entire platform, again, slowing you down. Nothing you do. It was funny, I was reading in tech support. You guys have all funny recipes. It reminds me of the Nintendo days when your Nintendo game was like not working. Everybody would pull it out and blow hot air into it. And your friend's like, no, blow cold air. No, man, my mom told me blow hot air. You blow it like 5 times and you push it in and click it up and down 3 times. Turn the button on, hit the reset for 3 seconds. All of a sudden your Nintendo game works. The funny thing was that the only reason your Nintendo game wasn't working was just because the connections were slim and dirty. But everybody had a recipe for it, right? So there's no recipe for Rocket Scooter, and everybody's kind of whipping up one. It's just random what you're experiencing. If everyone collectively sat here and waited, and what we're going to do with the new update is there going to be more basically lanes of traffic, so it shouldn't be an issue. But we're also going to remove the default scanner actively being on, so we don't have thousands of people pulling data from the scanner, which is prompting people to refresh. Because what happens is this light, we made a mistake with this one. It says disconnected when you're really connected, because with light will turn red when any of these are red. And if the scanner turns red, it doesn't matter because you only need it when you're using it. And the scanner is only updating the data in these fields in real time. The scanner will still work. It'll still send and get results when you click scan. The scanner disconnect is just the field of data, like the active price and stuff that's updating. So even if this is disconnected, this is still working. It's just a way for us to troubleshoot the platform. But what's happening is we're seeing that people are seeing the scanner disconnected and it makes this light red, and then they're hitting F5 to refresh the whole platform, which sort of congests the freeway for everybody. But in all reality, I showed a picture yesterday in Discord that when this scanner was disconnected, all of my data still came through. Here, liquidity maps, resilience, nothing wasn't coming through. So I left the scanner disconnected all day, and I'm gonna do it today to show you the same thing, such that nothing's really interrupted. So people are thinking they're disconnected when they're not. That's basically what's happening. So that's causing a panic. They're like, I'm not connected to the platform. The connection's not working. We're like, yeah, no, you absolutely are connected. You're just not. It's just misleading. So we're gonna change all this, but that's some answers for you guys. If you collapse that button that the scanner has in it, does it still load the data? It's still cached, but it's not up. It's still updating the data, yeah, in real time. The socket's still connected. It doesn't turn red if futures are offline. So the 4 different pieces that we have, let me show you what they are. Live is your live candle data for equities. Futures is your live data for futures, as well as like futures tickers and then things in the DD table. Scanner is just the fields in the scanner. they're updating. And then Brazil, which is kind of named funny, is everything that is live ticking on this platform. So related to liquidity maps. So these guys right here, these guys right here, these guys right here, those are all in the Brazil socket. So what was happening is that when people were losing access to the scanner who aren't really using it, because we looked at the logs, they're hitting F5 to refresh, and then it's congesting up everything, which is starting to crash Brazil for some people. So it's like so at the start of the day, we found there was one user that hit F5 like 15 times, and they were just disconnected from the scanner and they spammed it. Another person spammed it like dozens of times throughout the week for no reason, just in the first 2 minutes of the market. So interestingly enough, don't hit F5. That's kind of the rule. It's been said, best way is to alt F4 over and over. Exactly. So there you go. There's some answers for you guys. Guilty until yesterday's class. It's okay. You'll notice that if you hit F5 like 2 times in a row, a little modal pops up and tells you, please use refresh on the chart for better performance. It actually tells you not to do that. So click this button here. If you ever want to reload the liquidity maps, just click this button. You see how it just refreshes all of this and it doesn't reload the platform. So it's actually designed just to send a quickie little rest call to the server and get the data back. So if you refresh by hitting F5, it reestablishes connections to all these sockets. So it's kind of like your, hey, send me the data again. And those connection requests, you're sending 4 different ones every time you hit F5, and then it starts to compound up, and yeah. Cool. I was scaring myself. I heard some noise below the desk, and it's like my foot hitting something. I was like, what is that? All right, so we're getting ready to go here. We had CPI kind of popped a little bit. We'll check out the liquidity maps again in just a second. Yeah, so basically just load up until we're going to default all this, and we're going to upgrade the infrastructure. So yeah, so hopefully that will, and the one thing is we do is can't prevent people from hitting F5. We can just build bigger infrastructure and spend more money to make sure it can handle it, but unnecessarily so. There's just a proper way to reboot the platform. So an example, this is talking about yesterday's class, is that liquidity map is not on a socket. So even if all 4 of these lights are red, your liquidity map will still come through when you click that button. Liquidity map is completely separate because it's not on a web socket. It's a REST call. So when we click this, all the platform does is, hey, what's the liquidity map? Okay, cool, thank you. Draw it. So interestingly enough, I was hearing people saying like, well, I'm disconnected from this and my liquidity maps are working. Absolutely not true. That will never happen because it's not, liquidity map's not part of any of those sockets. So we wanted to dispel some of the wives' tales about, but it's cool to see like how everybody is kind of like trying to figure out how to like get stuff faster and things. It's cute. I like it. It's like me playing Nintendo when I was 8. My brother and I had competing theories on the fastest way to get a Nintendo game to load. Here's an example of this. This light went red and the scanner light was red and everything else was working. And it actually went red here and I left it on for 2 hours. As you see, resilience was going just fine. Liquidity map was there just fine. Candle day was there just fine. Nothing was off except for the scanners updating data wasn't there. But people are seeing this and hitting F5 to refresh the whole platform when you don't even need to do it. Just trust me on this. If we all collectively do this, everyone will stop seeing issues until we have the patch come out pretty soon. So, scanner light is red. You will still get updated everything. Nothing turns off. The scanner has nothing to do with anything. As a matter of fact, the majority of you do not use the scanner. Almost all of you are futures traders. So the fact that we turn it on by default is kind of our issue. But we thought it'd be a visual cue to say, hey, there's a scanner here, by the way. But it's like essentially opening additional data that you don't need. So what happens is when other people are trying to connect, it starts to congest everything else, and that's kind of the thing. So if you hit save layout with the scanner, it's supposed to save the setting, but there's actually, we just noticed there's a bug because it's not. So it should eventually save your layout when you do that. So an example, I'm going to leave my charts open and just leave them here, and then we'll watch the liquidity maps will just pop up. We haven't had a production release in a while. On the platform, we have had a couple of small ones, but we built the marketplace as our main focus for 2023. And now all of our production releases are going to be for platform. We have all these cool things. The first one is that the new hedge pressure correlation for weekly hedge pressure is going to be switched, I think, today. I told him to switch it by today. So I'll ask him if he did it by today. If not, by tomorrow, new rigorous model hedge pressure. Weekly hedge pressure is going to have 75% same side close rate with the new rigorous model for the new options, which is amazing. Dynamic hedge pressure, the overnights from the bot, is also almost done for us to test in beta. So those are going to be coming out pretty soon. Or that one is. Yeah, so it's going to be all in the back end, Arch. You nailed it. We already tested it. I've already been trading off of it. It's good to go. All right, 1 minute till market opens. Like I said, if you need liquidity maps to ever pop up, just click this circle. Never F5 refresh the platform. If we all collectively do that, nobody makes a snowball. All right, you good? I love you guys. All right, let's go. Do we have risk interval CL? Yeah, so that's another fix that we're working on. I had a meeting with developer last night about all the new fixes on the platform. F5, F5, F5. Okay, market's open now. So watch, just watch. I'm not doing anything. I'm not clicking anything. Oh, we're gonna watch this. Just watch. Look, it just pops up. Don't spam, don't touch, don't click. Just let it ride. Yeah, so Jojo, you can do any futures broker will work with us. So if you have anybody that works with CQG will work with us. So you don't have to go through edge clear, and that's also going to be the next patch. We're removing the word edge clear from here because we now have hundreds of brokers, not just edge clear. They were just our first one. So you can do, I recommend AMP. That's who I use. They're $100 account minimum. So the best part. See, liquidity map popped up. It says disconnected. All the stuff works. Candle still works. Resilience still works. I was there. You go. So everything's good. So remember, nobody has to click anything in the mornings. Liquidity map takes 30 seconds to 120 seconds at minimum to pop up for the indices, at maximum 10 minutes. So if your liquidity maps for the smaller stocks come in after 8 minutes, that is absolutely normal. We run the calculation upwards of 8 minutes until the integrity check is done. Some stocks will take up to 8 minutes to do the calc because they had such an illiquid options chain. There's just not good enough data. You guys know that I make this trade every single time. Every single time. Every single time. Let's wait till we get it. That's the S&P. Let's go back and check on QQQ. EST, baby. EST, baby. Look at this. Disconnected, yet liquidity map still shows up. This is how it works. These are all different sockets. All right. Every single time on Qs. Do I? Dare I? So in your case, make sure you are connected. Click this right here to get your liquidity map. Do I want Q or do I want SPY? Q is negative. Okay. Question just is, do I want to tap it? Oh, yeah. UVXY on MHP, huh? Okay, so this is going to be a caution in the market today. Let's see. So no trade inside of here with the VIX caution. I'm being very careful. Resiliences are positive, so we have a pressure from here to here. Res positive. We're good there. Okay, nope. So res is jumping negative. Okay, so it looks like we're gonna get this today. Now the question is, should I take this trade every single time? I always do. So I'll tap it. There's no chasing the long from here. Wait, Michael Benny, what'd you do? You click this button right here and it popped up. There you go. So as a collective group, everybody, make sure you teach people. And I made a joke yesterday and I said, if I see somebody else complaining in chat because they didn't follow the instruction, I will ban them from chat for a week, and then I will find the previous 2 people that posted above them that have nothing to do with that person and also ban them for a week. So you guys help each other out. Or I'm going to make the person that didn't hear the announcement and the 2 innocent bystanders do push-ups as a punishment. That's right. I'll punish all you. I'll make all of you guys. So y'all tell each other this. You do some push-ups. This is basic training here. That's right. Oh, you're throwing up your chow while we're running? All right, you stop. The 2 guys in front of you run 2 laps, and you watch them run. They're not going to like you anymore after this. I'm just kidding. But seriously, though, that was a funny joke. But no, I want you guys to help each other know that. Click this button, never FI refresh. This will pop your liquidity maps right up. That's why we did it. And you're good. And Michael, even when your Brazil was not connected, it still did. So if your Brazil is not connected, just click reconnect and it should be fine. Like this. Reestablish the target. Liquidity maps printed 4 minutes in. See, Kevin wasn't here getting the message. Kevin didn't listen to a damn thing I said this morning. Liquidity maps take up to 10 minutes to calculate. That is the nature of liquidity maps calculation. They're not instant. So I know it may seem too long, but sometimes it's what they'll be for whatever you're looking at. As soon as they are calculated, S&P and QQQ are done in 30 seconds. You can click this button and they will show up. They will immediately pop up because they're calculated on a server. Can I add feedback to the refresh button? Can you tell I'm clicking it? If it's working, look, it'll reload. Watch me do it. I'll just reload. It redraws and reloads. So, rule of thumb, after 30 seconds, QQQ, IWM, SPY, and UVXY, just you can click refresh, it'll show up. It should auto load. Oh yeah, that's right, I'm sorry. I got you, yeah. Always forget. I always run this thing way too small. Okay, so right now there's no trade set up. In here, the market's gonna pull back a little bit. We had CPI burp the market today. This is a very clean and easy setup. Resilience less than 0, which means we span the box this way. I'm not shorting this. There is no short setup. Also note that UVXY is hitting a bullseye bottom. We're breaking hedge to the downside, which is good. Inside of here, resilience is less than 0. This is a bull trap. It doesn't mean I'm shorting this. What it means is I'm likely to get the every single time trade I always want to take, which is that one here. Is that better? Yeah. Is Matt a veteran? All of my military folks in here are like getting PTSD from basic trading because of Matt's meanness to the community. I'm gonna make you and the 2 people next. I'm gonna make the 2 people next to you. I'm gonna give you double servings at lunch and make the 2 people next to you run laps. I'm not gonna make you feel bad right now. I'm gonna make you feel bad later. I'm gonna make everybody hate you. Make the wall sweat, baby. Let's go. Drill Sergeant Matt. Spybird bottom HP. Yeah. All right. That's a quickie candle. All right. Let's hit it good. Our DD ratio hasn't been calculated yet. Let me check this really quick. So DD ratio, the calculation requires 50% of the S&P liquidity amount that's coming through. Come on, every single time, baby. Let's double check futures, make sure I have all my things over here. I'll log in the futures account. Wait, what? Oh. Here I am trying to troubleshoot to show you guys an example. Then I disconnected myself from my futures account. Okay. This is what you should never do. Should never refresh the platform, but I need to refresh to establish my futures connection. So my actual connection here, instead of disconnecting and reconnecting because I'm on the stream. If you ever experience this issue, disconnect and reconnect, but I don't want you guys to see my password is I love my little ponies. So I'm going to have to hit F5 to refresh, unfortunately. So don't ever do what I just did. Farmer NG here. Oh, really? Nice. And I have really shitty internet because I'm in a hotel, so it's kind of like booty today. $120 a month for Starlink is worth it. I should get it. To the good old days, running information every day for PT as everyone started sweating. You can smell what they were drinking the night before. Oh, that's incredible. Yeah. Yeah, this hotel has like the worst, slowest internet. GM trading for 2 decades, but ready to upskill daily. Let's go, Gus. Let's go. Welcome to the club, man. So my internet's really slow, so I'm kind of like having to finagle. A lot of times if you remove the indicator and add it back on, it'll pop it back up as well. See, all the things I didn't refresh the platform, only to reestablish my futures login because my internet here is really slow trying to establish some of the connections. All right, so let's make sure we get some moves here. Cedric, I did take it on ES. When I have a choice, I'll always take ES if it's better looking. ES is the better resilience. It's slightly, if you look at it, it's less negative. So I always take the stronger of all the setups. There we go. It's in the funded account, baby. Every single time. Let's go. Let's go. Come on. MR Day, no trace to me. Omar, have a good one. Oh. All right. Come on, baby. Although the negative resilience, not the best. So I might get lucky just to get this one scalp, and I'll probably be out for the day. I don't think we're gonna rally off of this resilience being positive. Would that not apply to the QQQ trade? Absolutely would apply to the QQQ trade. So I got about 4 more points on this. I'll take about 1,000 the funded account. Let's take a look. It does. So it's gonna fight inside of here. With it being negative, after the pop, it's going to be done. So watch. As soon as I get the pop, I'm going to close it out. I'm not going to be... I got about 4 more points on this. Come on, baby. Actually, it's... Oh, wait, never mind. It's 2 points. About 2 points from here. About 60-20. Every single time, all or nothing. Let's go, baby. Come on. Negative resilience is going to pop this thing down, though. So the problem is it's going to have a hard time going up. So you guys know our rules here. Resilience is going to make this happen. DD is going to likely make this up, which our DD calculation hasn't completed yet because it's only about a third of the liquidity map. So right now we're running a check on the rest, a second pull on the data. So this is going to like fight its way up there, and I'm out. I'm literally out of the count. Yo, friends, hit that like button really quick. Do me a favor. Bottom right of the screen, 200 people in here. Let's get that to 100 plus. Help the algo out. And letting you guys know that we do a contest every single Friday giving away 3 Elite Trader Funding static eval accounts, $100,000 a pop. We give away every single Friday, so be here every single giveaway. We're also going to give away a Rock Scooter if you guys want to learn what it is we're teaching. If you join our program for a month, I'll give you the link. $100, half price. Is our Black Friday sale. You can learn everything we teach, everything I'm laying down here. And there's a drawing to give away 2 free lifetime memberships too. Literally 2, 4,000 each. And we're doing that on this Friday is the giveaway. This Friday. This Friday. Now, again, all or nothing trade. I'm moving it to there. If I stop out, I stop out. Which would be sad to be up $1,000 and then stop out. But I want to get the whole trade. It's going to try to work its way down because the resiliences are negative. It's wanting to fill the gap this way. So it's not going to just blast straight up to it. It's going to have to fight its way there in a couple waves. Master Rich started exiting early. That's okay. I mean, say your R&R. There's nothing wrong with exiting somewhat early, but if you rob your R&R, you're going to lose money over time. So if your R&R is like 2 to 1, you exit halfway out, then you're still trading 1-to-1 trades, and you're going to be flipping coin. So a trade like this, it's all or nothing. I very rarely will trim out early. But you do you, boo. The only legit trading education out there? No, don't stop. Look at this. It's hating me today. It's hating me today. How's this playlist? I just picked something random. I actually can't even hear it. It's so low on my computer. Is it decent? What is it? What kind of music is it? I heard some generic sounding hip hop earlier. Is it decent or should I axe it? Oh, you guys can't hear the music? Oh, then maybe my encoder is not picking it up. Oh, it's very quiet. Oh, okay. Yeah, Monday's stream got taken down, or yesterday's stream got taken down due to copyrights. Because I was playing the wrong playlist on accident. I was playing my actual playlist. I was like, oh man, the music today is a bunch of bangers. I love it. And then YouTube was like, your playlist or your video has been blocked in these countries. And I was like, wait, what? Cannot be monetized or seen. So I had to like dispute like 8 different songs, and I'm still disputing them. Yeah, it was some pretty good bangers on that list. But that was the playlist I was listening to while driving out here. So it was like my real playlist. So yeah, if it hits all or nothing trade level second time when it enters, yeah, I'd make the trade every single time. That's the joke there. That everybody says EST. Typically it's every single time. So right now, Resilience is trying to fight this lower to do this. This is trying to push it higher. And then, like I said, okay, let me see if I can't find this here. Gabson filled. What does Nasdaq look like? Okay. Like I said, heartbreaking if it doesn't pan out on this one. Let's see. Let's hope on it. Hedge break in the bear zone. Not the best setup. Boo. Boo. Don't be dumb today. Don't be dumb, market. 97. So yeah, there's a lot of room, especially to MHP right now. Come on. Come on, baby. Let's run it. Come on. Come on. Come on. Come on, baby. Come on, baby. Come on, baby. Let's watch Nasdaq. Let's see what Nasdaq's doing. Pushing both ways. It happens. I kind of don't like the spread that we're seeing. I always take this trade every single time. Every single time I take it. I got my fingers crossed on this one. S&P. You're being so mean to me today. Tyler, what kind of issues are you having? Tyler, disconnect. Delete the liquidity map and add it back, or clear cookies on your platform. Whatever you're experiencing, it's not a server thing. If you're still experiencing issues after all of that, there's something in your cache. You either reload your browser, reset your cache, your browser history, all that stuff. But before you do that, delete the liquidity map and re-add it. You might have changed a setting and you don't know it. That's causing that issue as well. A lot of times you can glitch your platform by changing settings and changing colors. Sometimes that can happen too. And let me explain something to you, Tyler. 99.9% of people are not having this issue. Only you and a couple others. So I'm trying to help you troubleshoot it. Most people, it just opens up and opens up. So I'm going to give you steps. Just try to follow them, okay? We have a user base of 6,000 people. I see like maybe 5 or 10 people reporting something. So I'm going to try to help you with the steps that help. A lot of times it could be your internet. Okay, what ticker? Like number one, let's start with following directions, bro. Let me explain here. Let me teach you something. A lot of people aren't following directions. Start here. Watch this. Help desk, how to get help. Follow these, how to submit a support ticket. Do not report the same issue twice. That's it. Oh, wait, hold on. Wait. Take a picture, a full screen screenshot of what you're experiencing and post it here. It's in bold. Post a full screen screenshot and we can help you. If you don't mind doing that for us, bud. I can't like see what you see, but I can definitely help you out. Yeah, I know who you're on the Discord. You write in tech support every day and you don't follow the rules. Post a full screen screenshot because that way people can help you. Actually, it's set what it actually says here. LOL, goofball. Get your butt over here and do this. I love you. Look, go here. Post a full screen screenshot. Include everything, including your taskbar, time, etc. It's the rule. It's the top rule. How to get help. You literally, if you do that, I can fix your problem as quickly as possible. But open up all your tabs here so I can see what's going on. Oh my God. Come on. Come on. Get the move. If your sockets are connected, you're going to get your data. If liquidity map indicator is here, it's going to pop up. If it's not popping up, then there's something in your browser keeping it from happening. Because our technology has nothing to do with the platform getting you the data. Our calculations are done on a server, which means if they're done for me, they're done for everyone. If I get the calculations in, they're done. You're not getting either the message to them or they're not getting the message to you. The platform is not that suspect if you're not getting your data lit up. It's the connection. So something is limiting your communication from here to here. This button asks the server, give me the data. That's it. It's as simple as that. So if something's happening here, you got like a disconnect somewhere in that chain. So it's like liquidity maps are available. Why can't you get them? Your connection's either timing out or your platform is glitching or something is happening to keep that. So that's where the chain is broken. That's why I want to see all these pieces. Maybe I can help you. Yeah, we're trying to get a ticketing tool set up. Make it easier. But so yeah, like you especially, I love you to death, but you're the one in the logs that was spamming F5 at the start of the market. You're the one that's doing it like 20 times. So make sure you never hit F5 in the platform. Don't ever do that. Just click this circle right here. So make sure you don't need to refresh your whole fucking market today. Come on. Yeah, we got a ticketing bot. I just not had a moment to set it up yet though. Oh, come on, market. Stop being crazy. No, not today. Yesterday, bro. Like, we were looking at all the accounts, and like a lot of people were hitting F5 to refresh the platform. Just make sure that you don't do that, because what that does is it creates further congestion. So if you need liquidity maps, you must click this circle. If you start hitting F5 a bunch, you're going to create a problem for yourself. The platform can mess up, can glitch, whatever. Don't refresh the browser that way. Just click this button right here and it loads up. What happens when you click this button? That's my first question. See how it just loads right up? What happens when you do that? I need you to pay attention. Okay, so number 2, are all these lights green on your end? Come on, baby, let's go. Let's do this quick, Tyler. I'll help you, bud. This market's being so dumb today. Come on, move. Neil, you contact your broker that works with CQG. You don't need to actually use our interface at all. Your broker will give you a login. Your broker will know who Rocket Scooter is. Your broker will already work with us. So what's your broker's name? I'll tell you how to get to it. Where's that button to show these? Right here. It's called status. Ninja, whoever was asking. Tradabate. So Tradabate is the only broker pretty much that doesn't work with anybody. So we can't connect to Tradabate because Tradabate doesn't allow third-party connections because they're trying to be like Apple, like an all-in-one kind of thing. Ninja Trader and Tradabate are the same thing. Same company. They don't work with anybody anymore. Should I be using the web platform or use the pop-out? Oh God, come on. Come on, market. Boo. Boo. Yous are getting shit on. Come on, Spy. Don't give us hate today. This sucks. MHP would be the next trade. So the problem is it's not giving me a lot of love on this one. Let's see where QQQ bottom resistance is. Yeah, this one's not that fun. Possible hedge break in a bear zone. Not the best. Resilience is still negative. It's going to have a hard time pushing through there. So I'm going to probably start trimming this. It's not getting the love I want. I'm going to hang on just a smack more. Let me double check UBXY. That's why the volatility is there. So I should be exiting this trade pretty soon. The pop-out function for the app loaded everything instantly. Wonder if that would be better to use going forward. So yeah, so there's something going on with your browser if that's what's causing it. So I don't know if this will help you. Like when you pop out the chart, everything loads up. Something in your main chart is kind of glitching out. So do me a couple things. It's not your connection. It's not your connectability. I want you to go here physically like close down all your small charts. I'll walk you through this, Tyler. Okay, ready? Close everything down. Close everything down. Like everything. Close the platform, close everything. Then reopen the platform back up in the same browser. So we're gonna isolate to see if it's not your browser. Okay. Start from scratch. As soon as you do that, click your little profile and click settings. It's gonna pop out a little tab over here. I want you to scroll at the bottom. See how there's all these little settings? Click load default. Click this. Oh, this is shit. Let me start trimming this out. I'm not getting the love I want. I'm sure I'm SME just a little bit because I'm hitting that stop. This is not the trade I want. So load your default, and as soon as you load your default, click save layout. So save a new default. Okay. You see your liquidity map right there? Oh, this is boo. Oh, hedge pressure is really close. Monthly hedge. That's the only reason I'm still hanging on to this, because it's right on the edge. I can take a little more drawdown to snap into it from here. It had loaded prior to clicking it, thankfully. Okay. Okay, now what you do, just click save layout right now. Just click save layout. Okay. There it is. There it is. There it is. Yeah, MHP right on the edge. What a fucking day. All right. We're going to risk it for the biscuit. Let's be crazy. Here to here now. Okay, now, don't ever do this again, but hit F5 and refresh the whole thing. And it should pop up. And if it works, you owe me your beer. Me trying to focus on my trade and helping Ty over here. This is the story of what makes it hard to trade. No! I'm gonna don't fucking never mind. I don't want 4. I just want 2. MHP break. Alright, fuck this. Alright, I'm gonna close it out. Alright. Screw this day. Fuck this day. Did it work, Ty? You good? When you refresh that one time, did it pop up? I got you, man. No, you guys come first. I've been trading all my life. Now I finally have friends. I'm gonna hang out with y'all. Dude, this market. Lame. It was already there? Okay, you're good. You should be good. Alright, yeah, sit out of the way on MHP breaks. Good lordy. This is just one of those unfortunate days. Boo. That's okay. Well, you also had, yeah, so this was already giving me the warning signs, but I did want to take the risk to get that trade up, but I was being a little I was being a little picky on trying to get 2 extra points, but that only didn't work. Just markets are angry today. Yeah, it did. DD is good. Resilience is negative. So unfortunately, that's just what happened. We knew it was not going to rally past here, but I was wanting to squeeze that extra little bit. Well, that wasn't fun. Okay, so today, yeah, there's no setup, MHP break. Everything's boo. But that's okay. Risk management is all that matters. Take a good shot at things. Close out early. That was very weird. All right, so let me see if I reclaim MHP. I'll back to long. But the problem with this one, we'll tap this one more time. From here to here, we'll take. If we reclaim MHP. How common it is to have 2 MHP breaks on back-to-back days? Not really that common to break. And it should close on the right side most of the time. So today, there's 2 different setups if you're a bear here, which I'm not going to be a bear today. But if this taps here, there is a short entry from here down the bottom DD band. That is the short setup for anybody that is a bear. So once the long setup doesn't pan out as quickly as it does, we shouldn't be overshooting this much, but I'm going to be cautious. If we're back to here, I'm back to longing. So just remember that. But I'm going to wait for the break. Yeah, so futures had MHP bouncer here as well. So let's let this play around. Just like yesterday. I'm so scared. Let's play with some micros. Yeah, I'm gonna be very cautious with the short. For sure. I probably won't take the short because DD ratio is still pretty good. Let's hit it with some micros, whatever. Kind of crawl back on this one. See, even though I step out, I get back in, but I'm gonna take it really small. Just put something in there. Ain't that some shit, right? That crazy little flush there. Watching that today. Yeah, I know. What does Kiki look like? So this was highly unusual. So I guess just overreaction to CPI, but we'll see. Tyler, is your stuff fixed up, bro? Do I got you? Your stuff working good now? Aw, dude, I'm glad to help, man. That's what I said. If you post a screenshot, I'll be able to see in a second. Like, I know the platform inside and out, so I'll be able to, like, walk you through. I'm glad I fixed you up, dude. And trust me, Slacks is really awesome too. He knows everything. There's still some tricks that he may not know, like, but he's usually really good at helping you out. So if you post a screenshot, that helps him because he can see it in a second. He's so trained on this. This should get you good going forward. Like whatever is happening in your browser, you have some kind of like refreshing your settings is usually the first. There's a setting on your end, and a lot of times has to do with the auto scaling. So here was another trick I'm going to teach you. In the settings, because TradingView has its like own default auto scaling, and we also have our own auto scaling as well. If you go to chart and you can turn off some of these features, because a lot of times TradingView is auto scaling and our auto scaling is glitching with each other. So what TradingView's auto scaling does, you can click it to turn it on and off. See how it turns blue when you flag it on? On our end, you can turn the auto scaling off, and what it does, what our auto scaling does, is it will, let me show you a cool trick. So our auto scaling is designed hold on, let me watch this because I'm around the edge. If we break MHP again, I'm just gonna cry. And go back to bed and cry. So what our auto scaling does is it actually will move the chart to look like this. It'll have the chart centered. And it will have it'll put MHP, hedge pressure, your zones, resilience. Your zones, your redistribution zone in the bottom and top of the daily session all in the same frame. So we do it to where you thumb through the liquidity maps very quickly and they'll all be lined up. So watch, when I click auto scaling off, it also default and turns off TradingView's auto scaling. So when I turn auto scaling on, it also doesn't do TradingView's auto scaling. So ours will turn all of it off, but it won't turn TradingView's on. So a lot of times that creates like a glitch sometimes. And we can't remove it. It's just something that came with their platform. But our auto scaling rights on top of theirs. So watch when I have auto scaling turned on. Watch what it does. It's pretty cool. So when I hit QQQ. Actually, let me make sure I have it turned on here. Okay. I'm going to turn TradingViews on. You see how all of them are kind of like lined up? The bear zone and bull zone are drawn at the same exact place no matter what ticker I'm loading up. It makes it easy to have all your liquidity maps like front and center. So our auto scaling does it like this, to where they all just pop up right in the center. Yeah, so blue is TradingView's own auto scaling that just auto scales the candles that are on the display itself. It's weird. So like basically TradingView, if I do this and I click auto scale, it puts the candles in the frame. So like if I have candles off the frame and I click this, TradingView just centers the candles. We center the candles plus bull zone bottom. Hedge pressure, monthly hedge pressure, redistribution zone, candle bottom and top. So we center all of this, and we center the sides of the liquidity map to be front and center like this, so that you can thumb through liquidity map super quick without ever having to move your chart around. See how right here I get the information? I'm like, oh, okay. Bullish, that's good. Okay. Bullish MHP, that's good. Okay. IWM, check. Right. So that's why we did our auto scaling a little different for that purpose. But trading views, when you click it on, it'll just center the candles. So sometimes they'll conflict. That's why when you reset your settings, that should clear it up. But it's a trading view thing, and we still haven't figured out all the bells and whistles on that one. For the most part, if you're having display issues, going to your settings and clearing out that default, loading default, turning these off, turning this off, sorry, this off and this off, and hitting save. And then turning them back on sometimes just throws it back into place. And the drawing, so what happens a lot of time is that your platform's just not drawing it. And a lot of times that conflict has actually found comes from that. So if you're one of the rare people that happens to you because you did something that triggered it, we've seen it happen a couple of times with some people. And that usually fixes it up. So that step I took with you seemed to have fixed it, so that's good. You should be good from there. What a crummy day today. Today has just been like such a garbage day today. Come on, S&P. %90 of days hold MHP. Or we'll close here by the end of the day. We're below triple B, so overshooting is not expected. This was a drastic overshoot because of the CPI. If it starts falling again, it's the day's over. Like, I will cut and just be done. It shouldn't overshoot to hold. It should hold. It should be pretty resilient. Moves. So any second loss of MHP, I'm out. So remember, we talked about triple B yesterday. VIX is clearly below triple B. So overshoots are expected whenever you're above triple B. When you're below triple B, an overshoot is not expected, which is why I cut pretty quick. And then I got back in once it reclaimed because it shouldn't be doing this. If it does this one more time, I'm out for good. That's a break. So it should be a clean bounce from here. It should be a very clean bounce from here. Clean. Which I'm hoping we say clean. And we'll see. It should be clean. If it fails, then it's a failure. So a failure would be easy to spot from here. Fingers crossed on it being clean. Fingers crossed. It should be clean. If it fails again, I'm out. I haven't clicked this button so quick. MHP breaks are no joke. So basically the market can collapse if it does happen. It happened yesterday and like 90% of days should close above here. So fingers are crossed on this one that it holds. If I lose 250 bucks on this, I'm gonna call it a day. My finger's literally on the button. I wouldn't say today's a downtrend day. I'd say today was just flushing out that it's probability is gonna close up in here. It's the DD ratio is so strong. It's not gonna. The market's gonna have a very hard time selling. There's no volatility. Number one. Number two is we're hitting MHP. MHP futures held. MHP equities is holding. DD ratio is really strong. Resilience is the only thing that's nasty. And so what I think is that resilience being nasty is what caused. Remember we talked about that this morning. We got resistance for the day today here, but open in middle, it's likely to close the middle more often than it doesn't. If it falls here, I'm done. I'm just gonna let it do its thing. I'm not gonna do anything else. If we fall, I'm done. This is likely to do this and sell and do this and then do this and probably tap that and then close inside of here. That's what today's gonna look like. So that's what's likely to happen. If the less probable thing is to break this a second time, if it breaks a second time, I'm out. But 90% of days, this will hold. Stocks are filling their gap to the downside, which caused a little bit of downward pressure, which overshot the indices, but this is likely to hold. It's not a trend down day at all. No, 0%. That's why I'm stabbing it. I'm just stabbing it small, though. Yeah, they got to flush out the longs first and then push it out. So this is basically what we're going to see today. If you want my opinion, whatever it's worth. Oops, let me redraw that. So let's put together the pieces. Negative resilience means that's resistance. And also means that's resistance outside of the box. So these are resistances, so it's going to have a hard time passing through that. If we lose MHP a second time, I'm out for good. 90% of days will close above that. It'll close on the same side it opened on. Like I said, if I lose 250 bucks, I'm going to close this and be done. If we break here, I'm just done for the day. This is the smallest probability of these trades. Done per day. I don't expect chop like this around it. I expect it to hold very cleanly because we're below triple B, so you're not going to have overshoots. So if it just drops like a smidge like that, I'm probably going to just close out. That's what I'm saying. Give myself like 250 bucks and I'm done. It should be a sharp pivot after the initial flush. That was the triple B class. So it should be sharp from here. CPI flush, forget that. From here, it needs to be sharp. So it's going to be very easy to determine if it's losing. So here, it should go up. Here, it should come down. If this is moving up and resilience is improving, which it's not, then if res improves, that happens. If res greater than 0, then we get that second move that I actually wanted from the start of the day, which I was betting on happening, and then the stocks were failing us. So as we approach here, I'm going to revisit this to see what I want to do. I'm still good on the long. Remember, guys, I mean, we teach you this every day. You wake up. Do you try to short this market? A lot of people talking about flushing, selling off. You don't try to short the market. Take a long, it didn't work out. Take a second long from this area. I don't ever bet that it fails. I get stopped. I pull the trigger. I'm gonna try it again. I'm always trying to be bull. Yesterday's class is about the greater market. Let's review. What's the greater market? Ready? Is the greater market bull or bear? Let's talk about it. Yesterday's class. Did you guys like yesterday's class? By the way, our Black Friday special is open. If you just want to take our classes, we made them 20 bucks for just Black Friday. It's normally $200 to join the program. You can come to all the classes for $20 each month, and we cycle through them live. Black Friday. So if you guys are like, let me check out Rocket Scooter, see what it's about, you get like a $20 intro. Again, it's fighting two different fights right here. This is pushing up, this is pushing down. That's why the middle is getting a whole lot of love right now. I'm waiting to see if this improves. Greater market, ready? DD, greater than half. That's bull. Greater than equal half. Number 2, SPY, greater than MHP, greater than equal to MHP. Bull. Number 3, monthly maps. Click this button here. Oh. Monthly maps. Bull side sloping down, bear side sloping down. That's double bullish. Oh god, I hate this. I hate this. Oh god, that color is so jarring. I'm sorry I picked this horrible red color. Monthly maps. Super bullish. Bull and short squeeze. All three things are up. The greater market is bullish. And then number 4, as a side note, VIX is less than triple V, which means you're gonna have razor sharp pivots, except for days where you have like events and CPIs with the first overshoot. It shouldn't overshoot and be razor sharp. Like I said, the word sharp, that's from yesterday's class, which is why I trust it to be sharp from here. But even though we had a first scare breaking MHP, that's why I'm only tapping it with micros to ride it back up to look for improvements. How'd I do today, guys? You guys nailed it, right? This is greater market is bullish. That's yesterday's class. It should be a sharp pivot minus the initial flush, which made it so crazy, which did scare me out. Let me redraw this in like a non-lame ass color. That was making, seriously guys, that was like burning a hole in my fucking retinas. All right. Sharp pivot, sharp. It needs to be sharp, which is rule number 4, VIX less than triple B. Okay. Number 2, 90% of days will close on the same side of MHP they open on. Number 3, resilience less than 0 is resistance here. So the market is going to have a lot of push and pull in this little zone right there. Let's check QQQs really quick. The market makes so much sense now. You have to consider the market sentiment. Yeah, the greater market always pretty much tells me what to do. Now, here's the rule from the class. If any of those 3 things are bullish, just one, then it's a bull market. For it to be a bear market, all 3 of those things need to be bearish. That's the difference. That's why we're pretty much always a bull. So remember, greater market. You have three different criteria, and then VIX is like how it gets there. So this is like bull or bear. Or 4 is how it moves. If 1, 2, or 3 of these things are bullish, if just one is bullish and the other 2 is bearish, it's a bull market. If 2 of them are bullish, it's really bull market. If 3 of them are bullish, it's an extremely bull market. If all 3 of them are bearish, then it's a bear market. That's how you do this. And we teach that all day long. So I don't usually try to take the bet that MHP breaks, because 90% of days it doesn't. And the long bet is paying off. It just sucks that I took a little bit of a loss for it paid off. But hey, that's trading, right? I don't flip-flop and chase the short like a numbskull in the greater bull market. All 3 of those things are bullish, as a matter of fact, which makes it a very strong bull market. Here we go. And Papa Bear was ultimately right at the start of the day. However, the shit is we don't got resilience giving us love today, and all I did was just put micros on it. Money's money, right? I'm still down about $1,000 though. And it happens. But at least I'm not down by shorting the downside. All right, there's the first resistance tap right here. Technically speaking, I should trim and close this. There are ways to check the real inflows and outflows outside of RS. Ooh, tell me more. Pushing the half gap. Res is negative. There's the trade I wanted. Oh, I love it. It's just me being a little wuss here. That is next resistance. That's where I need to trim. There it is. Ready? Pop in the middle. Trim it. All right. Ugh. All right, I trimmed it. Resilience is still negative. I should take this every single time, and here I'm being a wuss. I need to be backing on this trade. Let's be real. Yeah. I do long this every single time. Should I just pop it? No. Let me watch in queue for a second. You'll see how it works. Baby, it's all about risk management. How'd I do today? Even though I lost, I traded pretty well. I mean, that's pretty good execution. I did what I was supposed to do. You guys proud of me? Here I am, trading, making money, helping Tyler with his problems. Entertaining you awesome folks. Remember, even if it doesn't go out the way that you want it to, I still traded perfectly. I don't complain. I did exactly what I was supposed to do. I followed all my rules. Look, I got out of the way at the right time. Look how fucking great I am. Oh my god. Remember, I take this trade every single time. It didn't play out, so I held on to take my second entry, which is here, which this 90% of days closes above here. Clearly, we had a flush because of CPI. That happens sometimes around event days. So right here, I stopped out of my trade. I let it flush. I waited. Right here, I got back in the trade I originally was going to take, and then I waited, and I knew VIX should be sharp pivots because of triple B, and I traded right to my next resistance, and I got out here. Dude, I read this market like a fucking book, guys. This is why you join the Rocket Tutor program and learn this stuff. Even though I lost pretty gracefully. Because we threatened MHP VIX break, and then of course MHP break on the S&P, I traded it with micros. My confidence was shot a little bit after the first loss, so I traded it small. I didn't want to trade it super big. Yeah. The every single time trade, Ben's on this right here. Yeah, this is probably the one I should probably take this one again. Oops. Dare I? Want to hit with some more micros? Trade it back to bull zone. Get a little bit of improvement on. Let me let it pop. Let me let it pull back right down here. I'll tap it right now. Let me tap it. Come on. Let's go. Dare I? Dare I? Every single time. I'll put some markers on it again. Now, again, with resilience being negative and slightly improving, that's what we do want to see. But the EST, let's just do it. Whatever, EST every single time. I don't care if it lost this time. I hit it every single time. Every single time. Listen to me, guys. Every single time. Listen to me. Every single time. Again, micros, I'm a big wuss. Let's just see. Again, I have to follow the strat. I have to touch it every single time. I must have the probabilities work in my favor. I must. That's a pretty strong candle right there. The pop of the back to bear zone. Wow, boy. I got to every single time. I have to the stats are good on that trade. I got the probabilities play in my favor, but although I am a little jaded from today's movement, I'm gonna play it small today. I mean, I'm not gonna go in there and time. Again, sharp triple B here to here is the trade, and again, we're fighting right there. I'm gonna touch it with just a small amount. Like I said, I'm just playing with a couple $100 here instead of like big trades. If I lose this, then I'm gonna be done. UVXY. How are you doing? This is actually one of the problems here. These volatility issues right here, which I don't like. He said 5 micros. Dude, I'm spending micros on it right now. This I didn't want to happen again. This is actually failing a second time, so I don't like this. CPI days can be weird sometimes. If we're back to here, I'm going to add in the position. I just tapped it for a little bit. If we're here, I'm going to add to the position as well. I know. Am I considering fear and greed? Nope. I don't use that. I never use those index measurement things. They're typically always based on technical analysis, and I don't really trust technicals. Even with resilience negative, remember, resilience is... Yes, because DD outranks resilience. To answer your question, yes. So the DD trade should outrank resilience, but what it means is it hits here and then immediately sells. So the minute I touch the top, I'm done. Here, let's just tap it one more time. Let's hit it hard on second MHP bounce. Like I said, if I'm down like another $400 or so from here, if I lose 600, I'll close it out. Come on, baby. Sharp. Let's hit that sharp pivot. In MHP we trust. In 90% we trust. I'm doing my rain dance for the MHP weather gods. Please bring the rain, baby. Let it rain some dollars. This is a testing day in risk management by far, in position management. You guys are watching me do my best. This is some of my best trading I think I've done in a while. Risk management's bad. My confidence is good on the second bounce. I'm hitting it slightly harder. There it is, dude. Oh, you can't. Look, MHP is bay, baby. MHP, so good. So good. Cost basis management, baby. Watch this. Bot 5, bot 10 more. Got right here. Let's trim a little bit. Man, sometimes I impress myself. Come on. Resilience getting slightly better. It's not doing a lot. I don't trust big sharp candles like that either. A lot of times I just lock it in. VIX MHP is causing some volatility issues in the market. I ain't gonna lie. Come on. Come on. Hit the bull zone, baby. This is just not fun. Let me put 5 in my pocket and hold on to 10. I gotta take it. Resilience getting slightly better. We're aiming for it to go better, baby. This should go from here. There you go, Neil. That's the spirit. Say a prayer for me. Listen, this is what I'll tell you guys. It takes a long time. It takes a long time in your career to trust the greater market. Yesterday's class, one of the best classes we teach. Neil, you came to it. Oh, I saw you there. Don't ever argue with the greater market. Those 3 things are so strong. Yep. Even when MHP flushes on an event, they can happen sometimes. Like, this can happen. I just got out of the way and I wasn't thinking about shorting it. I said the correct short would be if we return to here to short it. But then people in chat were like, DD is so strong. And I really only, usually I'll take that short a lot of times. I'm convinced the market's selling off. If there was an event, wasn't an event, I would very happily short it. But sometimes an event can flush a bull side market. When all the indicators are bullish on the greater market, DD, MHP, monthly map, this is actually a very strong bull market. It's the strongest bull market you have. And also, VIX being below triple B, you're not going to experience a lot of volatility. So the idea that we experience a very quick burp of volatility, there's just post CPI flashing up pre-market lows. And we tested MHP and futures. We're telling. So let me go through my trades. You guys, y'all witnessed professional trading in action. You witnessed probably this morning some of the best risk management you probably have seen in a while. I'm gonna show you what I did. This is a study for the books. Now I might not be making money, but I've recovered most of my losses. Let me show you what I did. Okay. EST means every single time. The trade from here to here, I took it every single time. It works 90% of days. 90% of times. Without striking a 1-strike stop loss, which is 10 points in the S&P, 40 points on the NASDAQ. Okay. So every single time I take that trade. And I longed right here. I was waiting for that. And then I got squeezed. So I fell back to here. I usually have a 1-strike stop loss. From here to here is about 10 points. From here to here, my stop loss would have been here on that first trade. And in between here and my stop loss, I had a second entry, which is a much stronger entry with a 90% chance of bouncing. So I longed. I longed again right here. And then once we fell through MHP with velocity, I just closed out of everything with a pretty sizable loss. The market fell. I didn't do anything. I didn't do anything. I didn't do anything. I didn't do anything. And right when I got my confirmation, I longed again, but cautiously with 5 micros. Right? I think I did like a couple minis in here, but again, being cautious because the weird thing happened. I longed again with micros. Market moved. Came down. I forgot what I did here. Did I long again or close out? Oh yeah, no, I did. I longed with, actually I longed with 10 micros, I think. I got 5 and then I got 5 more. So I think I got 10. And I X'd out of all of it there. So I made a trade here. It fell here. I got 5 more. It fell to support again. I got 10 more. So I'm just lowering my cost basis down here to trade it. So 5 in case it goes, 15 in case it goes, 5 and 10 went up to there. I close out 5. So now I got my original trade, my original long, and my original spot. And now I'm just playing with profit on this last trade. So while I did avoid being long inside of a market crash, I did choose a second entry, which was within my 10-point range of a stop loss. These are all the lessons, you guys. You guys come to all the classes. I followed all my rules. And now I'm trading the quote-unquote first every single time trade that I always take. But this is actually pretty good execution, even when losing a trade, getting right back in. That's the one thing that takes you a lifetime to master, trusting when to get back in. And when it pops and comes to here, I'm loading up my trade right at the edge. And I know because of this, it should be sharp pivots. So I'm gonna take really strong stabs here and start trimming there, longing there, trimming there. And I'm still waiting for this trade to take off. As resilience is slightly improving, more stocks are starting to do this, even though it's not greater than 0. It's still going to have that big resistance. So it's going to have a hard time breaking through this little spot right here because of res. But yeah, this is pretty, I'm not gonna lie, this is pretty good risk management. When trade goes against you, getting out of the way quick, you guys saw that? If you were to rate how, like on a scale of 1 to 10, I didn't make, I'm only down like $700-800 or something right now. Rate like my execution. How'd I do? Like getting in, getting out, closing. And I was distracted. I'm helping you guys in tech support at the same time, multitasking. Would you consider this fairly useful execute? See, what makes me better than most traders is how quickly I am to bail on the trade and how quickly I am to get back in. That's what you spend your lifetime trying to master. That's what we train you on. Get out when you need to, get back in when you need to. Don't be afraid of the market. If your confidence is shot, just trade smaller. I can trade well and still lose money and trade badly and make money. That's the way. I love that saying, Simon. It's a good one. But executing position management, risk management is kind of like, you know, the way to go. I know right now that we're going to be chopping exactly in this range because of the fight between here and the fight between there. The problem with this is that it's going to have a hard time breaking unless this gets better. And this is getting better. So some of the stocks are trying to move. Unfortunately, it's not enough. So this could flush a second time, which is what I don't like. And because of that, I've got a small position. I'm on the hook for $500 up or down inside of here. So Christos, you're only down 650. So you guys are basically trading small risk. That's good. I like to see that. Me and John Carter, best traders I know. I love John Carter. He's a good guy. I talk to him a lot actually on the phone. I give him a call every once in a while. He's really good. He's a really good guy. He lives in Austin too. He's very solid. I have a standing open invite to go out to his ranch in Austin. Last time I chatted with him, he was like, "Next time you guys are out here, that'd be so much fun." I've never hung out with him, but he's a real cool guy. And he's got zebras on his ranch. That'd be fun to go check it out. And kangaroos, yeah, he does. Kangaroos, zebras. I know a lot of the people a lot of the people at the simpler group are really good. Ragi, she's awesome. They're all good peeps. You're a member at Simpler for like 10 years? Oh, cool. Back when it was Simpler Futures, and before it was Simpler Futures, it was... What was it? They had another name before they changed to Simpler. It was called... Before it was Simpler, they had another name. 15 years ago. Rocky is one of the best at teaching market understanding. Yeah, she's solid. She's a very... I actually have talked to her a lot as well. She's very, very scrutinous, very technical minded, like a numbers girl. Like she's like me with numbers. She's just always about the numbers, has to make sense. Oh, which one? The Trade the Markets book. That's one of the first ones. That's one of the first ones I ever got my hands on. When I was a young trader. I don't read a lot of trading books. When I was younger, I kind of got into like reading trading books when I first got started. As the years went by, though, the one downside, but you know, risk management doesn't require like, okay, so like their stuff is all technical analysis, right? And technical analysis has its limits. It's, as the years went by, it's just as an analysis method has become less effective. It's not because it's bad or they're bad or anyone's bad. It's because the market has become more sophisticated in what data feeds it offers, and groups like us have created more sophisticated modern methods that are just so much better than technical analysis. And not to say that it doesn't have its merits, but as you see, like me drawing lines on charts with probabilities and arrows and the market kind of playing out just like that, how did I know we're gonna have sharp pivots here? Right? There's no technical analysis trick that can teach you that. How do I know to get out of the way exactly here? No technical analysis will tell me that either. How do I know to get right back in here, right? How do I know that I take this trade every single time? There's all kind of rules that we use based on newer methods. So like technical analysis is slowly on its face becoming less and less accurate at calling shots in the market. But what they're actually really good at is teaching you risk management. And that's what I like, is that because you don't even need any trading technique, because we teach this in our classes, that the premise that we face, if you take our 20 days classes, I promise you, or your money back, the classes will change your life. 100%. If you're trying to learn how to trade, our classes will literally change your life. You will see markets completely different. We pose a theory. I'd even say a postulate, because a postulate is a fact that is just there, such that it says that if a blind monkey had a dart in his hand and he threw a dart at a dartboard, and the dartboard had a clock on it, wherever the dart hits the dartboard, the monkey just longs the S&P at that time, that day. And as long as you only have one handle, which is your position size, and you throttle your position size such that if you lost 20 days in a row, and at the end of those 20 days, you longed every one of those days at random times, and you lost only half your account or less by the end of 20 days, did you know you would still make money over time as a trader? That is a proven fact. We proved it in those classes. We showed you all the evidence of that in the classes. All you have to do is blindly long the market once a day with a smaller position as you lose money, larger position as you gain money. Make sure at the end of 20 losing days with your risk management strategy, that's all you need. Randomly longing the market with no trading strategy still makes money if you just control how much you lose, which proves, unfortunately for everybody, that there's no such thing as a winning trading strategy. There's only winning risk management. So the way to make money in the market is to randomly long the market
with just good risk management so that you don't blow up your account. We tested this through 2008 and 2001 and through COVID, and this strategy works historically. As a matter of fact, your 401k uses the same strategy. Your mutual funds, your IRAs, they all use the same strategy. They long, and then 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 ultimately the bear market turns up and goes higher. As long as you're putting money into your 401k and have your job, you're buying the dip as the market's crashing, and they're longing the market as long as it's crashing. They're just managing your portfolio by hedging with some kind of fixed income or options to keep it from going insolvent. But ultimately, they're just buying the dip. As a matter of fact, they buy the dip harder as it falls. So we'll prove to you in these classes why that fact is. And what that does is it's not to tell you to randomly long the market. It's to teach you that it's not your trading strategy being the reason that you're losing. It's not that you have the wrong indicators. It's not that you have some indicators and not other indicators. It's not that you're still in the search for the perfect indicator. It's to prove to you and to prove to everybody, finally, that needs to hear this, that technical analysis is completely a failed concept. Indicators will not work. As a matter of fact, you can make more money randomly longing the market. All you need to do is throttle your position size and how much you lose. We put this up against any major market crash and the strategy still wins. So how come we don't make money? Sometimes. How come those of you guys lose money over time? Because randomly longing the market is a winning strategy. So how do you lose money as a trader? And that's what we address in the class as well. It's because you bet too big for the risk you're taking. That is really the reason you're not making money. You have no way to gauge the risk of the trade that you're in, and therefore your position sizes are not even matching. It's like if you have 52 cards playing blackjack, and you have the ability to count the cards, which we do in the stock market. We have the ability to count the cards in the stock market. That's what I do every day. I have odds. If you count the cards in Vegas, they'll throw your ass out. You guys know that, right? If they catch you betting big on a +5 when you're counting face cards, the pit bosses are watching that stuff. They're also counting the cards to make sure that they're watching if you're betting big, you're +5 and betting small and you're -3. So you can't really get away. But here's the thing. We're betting big when we have the odds in our favor and betting small when we don't. We're counting cards. This is how you do it. So the idea is that technical analysis try to formulate a system in which indicators can enhance your probability of winning a trade, which I would argue that it's neutral. They don't predict the market because they're based on past price action, and more sophisticated and modern successful traders and hedge fund managers, Jim Simons, number one, stated that the stock market is nothing but random motion and Brownian motion, which I agree with his postulate. We start our premise at Rocket Scooters that the stock market is random, and you can't predict it. You can't predict the direction of the movement. And so we built our strategies on that premise. As technical analysis premise is that you can predict the stock market with past price history, and I think that just sounds ridiculous. And the most famous successful hedge fund manager in the world also said that that's ridiculous, and I agree with him. And I trade with an 80% win rate, and I say that's ridiculous, and I don't use it. The moment I got rid of technicals, my win rate went way through the roof. I'm trading for this last little pop, the bull zone. I'm looking for 10 points in the S&P, and I'm going to call it. It's going to fight right here in this little range where I'm sitting, but resilience is greater than 0, so it does look pretty solid. I think it does look good here. Should I tap it harder? The double? Let's just see. Res greater than 0, let's tap it double. If I get squeezed, I'm just going to cry and go to bed. So like basically what you guys don't do in trading is understand the risk you're taking. And so it's kind of like if you knew that you had an ace and you knew there were 2 cards left and you've only counted like all the face cards been used, but there's still 1 jack that hasn't been used. You have the 50-50 chance of getting a jack. That's a really high odds that you're going to get that. But yet you still bet small. Like you're not betting relative to the odds that you have. So the way that you make money in poker or in blackjack is not getting good cards dealt to you. That's the luck. The way that you make money trading is how many chips you put on the table for the odds you're supposed to have. And I turn that kind of mentality into a winning trading strategy. The trading strategy is not the indicators on the screen. It's how much you bet based on the odds that you have. And all of our stuff is just basically calculating odds. All right, let's see if my students understand this. Why did I just double my position right here? Tell me. Let's see if you guys can get it. Why did I double my position exactly right here? Why would I ever add to my position? It's a Mattingale. I might be wrong, but anytime I'm adding to my position, my confidence has gone up. Anytime reducing my position, my confidence has gone down. Every single time trade, yes, but also that just got really good. So when that got really bad, I was trading small. When that got good, I'm trading big again. It's like this never happened, right? Let's just forget that this even happened. The market has just now started right here. We're playing around, hitting my every single time. Everything's lining up. Great bull market. I'm right here. Resilience is positive. We're at the bear zone every single time trade. Let me hit it a little harder. Why not? Fixes less than triple B. We should have sharp pivots yet again. The market's tried to sell this off and has failed 3 different times, and now stocks are filling their gaps, and it looks pretty good. So my confidence got slightly better. Now again, if I'm wrong, I'm wrong. But you see how I'm like adding to my position as my confidence gets better and taking away when it's not. So the idea is that while I'm not just randomly betting, I'm betting based on confidence. Now, it's unusual to see this happening with that happening, so I don't like that this just happened. This is not my favorite right here. We'll see if I get that. Let's see if I get a really sharp V back to here. That's what I'd like to see. Yeah, res flip. So my confidence went slightly higher. I like this playlist. Actually not bad. It's been a while since I've heard some good hip hop or some good rap that wasn't mumble rap. I'll hear that song again. This song's pretty good. Who is that? I'm gonna add it to my list. Sad Boy Prolific. So this is like one of those no copyright playlists. So it's usually like new upcoming artists. That's kind of a banger. I'm digging it. This has been a tricky day. If we took some heat today, don't feel bad. Today was pretty hard. But remember, my trust is there. Market conditions are improving. My confidence is better. There's the V up I wanted to see. Let's go. Let's go. Come on. Come on. Res fighting at 0. Let's open up the small res chart so we can zoom in on this. Come on, res. I'm gonna watch this. Screenshot widget. Ooh, there's that trade, baby. Oh, we might actually make some money today. I'm loving it. Feeling good. Loyalty for NQs. Let's go, baby. NQ running the same kind of stuff. The problem with NQ is that it's still kind of below the threshold. So NQ being down here, I don't like. NQ is a good long setup on a 512 to 513 break. So again, down in here is a no. This is no trade zone for Nasdaq, unfortunately. That's the one reason I don't like about it. If you look at my screen right here, BRSU is just resistance from here. So there is no long setup in here on Nasdaq. Only proxy by SPY is this Nasdaq yanking up. But if Nasdaq is here, we long from here to here every single time. This is the best place. So essentially, like down inside of here, there is no appropriately good long setup on Nasdaq. On futures, Nasdaq has like an hedge pressure pivot here, and then resistance there. So Nasdaq, if it does burp up, it does come back down. So that basically lines up with here. So possibly from here to here at the small position is what I'm looking at in Nasdaq if I was touching it. But I'm trading it via SPY right now. So SPY is like in a better boat. Hide and upper. You feel shit, to be honest, dude. Sometimes it just happens. Like, if you got burned pretty hard, it happens on days like this. And again, the more you practice, the more you won't get caught off guard when things like this happen. Again, let me walk you through my mentality. I long here, I X there, right? When it fell, I had a question. Okay, do I get out of this trade or do I enter again because I have another setup here? Okay. 10 points from 97 is 96. My normal stop would be here, but if I have a normal stop at my next entry, which is a stronger entry, I will choose to add to my position here and trade this smaller. So that's why you didn't see me hit this with like 5 contracts out the door. I always anticipate a second entry on a trade. So I traded this medium, small, medium. Resilience was negative, so I hit it with like a smaller. I think I had 2 or 3 contracts, nothing crazy. And then when it fell to here, I hit it again. And when it fell through here, I just X'd out very quickly. I just got way out of the way. Then this happened. And then this happened. And immediately right here, I got back in with small. With micros. And then it went here and came here. I think I added more to it. Went to here, I trimmed out of some. Fell to here, I added more to it. Went back to here, trimmed out some, basically just like that. And then right where inside of here, resilience gets positive. Then I add more to the position, which is originally what I would have done normal. And here I am in 2 contracts at the same spot. Trust me when I say, don't be frustrated. It took me a lifetime to be able to do this. And as you practice, you're gonna get really good at reading the market as time goes by. Just don't be discouraged. This was a very challenging day even for me. I'm about to walk away green though. I think I got lucky on this. But don't be discouraged, brother. This day was rather challenging. And the greater bull market has me still looking for longs, not chasing shorts. And looks like my trade's going to take off, so that's good. The winning setup here. Dude, I am like digging this playlist, man. You guys may not know this about me. You know, y'all might know I'm a metalhead. Like I listen to metal. That was like my music growing up. I was in a metal band in college. I used to sing. I was the only kid in my group of metalheads, like in junior high, that listened to hip hop too, because I think hip hop is also metal. I somehow like just really get into like good poetry and good beats. But I think all my friends that are metalheads out there, metalheads have a deeper appreciation for music than most people. Some of you may think if you don't listen to metal, that's just a bunch of screaming and nastiness. But all my metalhead friends are like music snobs. They're like, oh yeah, dude, I love Cannibal Corpse, but I also love Michael Bublé and Frank Sinatra. I listen to a lot. I like a lot of music stuff. Okay. Very happy to be green, even if say it was challenging. Yeah, I mean, it's pretty challenging here. Like I said, I'm still hanging on for the all or nothing trade. The original trade I was going to get, where I started helping our boy here get his stuff fixed, which I'm glad to hear his stuff is fixed. Do I scale or hold a TP and take it off? Yeah, I'm taking it all off at this one. I'm going to do the scalp every single time. I'm not going to take a bull zone break and hold. Usually days where I take a big loss like today and then fight my way back and the market is not screaming with all bullish indicators, I tend to just kind of like not try to overtrade. I don't normally take that bull chase at 598 unless everything looks good. But I don't know. I maybe I'll hold on to it. We'll see. We'll see. We'll see. Options, what to do. Real lesson living live streams every day. Matt, your knowledge and positivity is really refreshing. Never allowed to retire. LOL. So, like I said, don't be discouraged. Today was a day that even the pros get a little shaken up on. This was a good revisit the stream and actually save this to your favorites. This was a lesson in risk management. Position management and risk management is the difference between winning and losing. It's not picking the right direction. It's not trying to chase the trend. It's not trying to reverse at the wrong time. It's just betting the odds that you have. And I've drawn on the odds on the screen. Getting in, getting back out, getting back in the original trade. These are very advanced. I would say like the highest of advanced techniques. This is like the upper echelon of the advanced techniques that you will have to master. And the problem is that you don't get a lot of practice days on this kind of stuff. Like markets very rarely will flush MHP and regain like this. You know, CPI and days like that, it can happen because you just get some abnormal overreactions. But it's not like every day you wake up getting used to a day like this. So it's kind of like, you know, as a master chess player, someone comes at you with a new strategy. You got to react with the tools that you have, the best you can. And like I said, don't be discouraged. Today was a very challenging day even for me. Before Rocket Scooter, I trade all day just in the open. Yeah, before Rocket Scooter, I was a chump. I traded in the daytime. I traded at nighttime. Before I built all of this, I was using a lot of different strategies. I built other strategies myself before I built the stuff here. But I started realizing early on that it was like my betting strategy that was really the thing that needed to be optimized. And I used to trade like random hours, random times. It's not that, it wasn't as sophisticated as it is now. Now I try to get all my trades in the first 2 hours and I'm done. 2-3 hours. Third day in a row where MHP is broken. Right. So MHP the market is trying. like the market is definitely holding because it's bullish, but there is a lot of profit taking going on. But remember, the 90% is not the amount of it breaking, it's where it closes at the end of the day. Which is why when we reclaimed it, I still took a stab at it. Like all the data looked good, right? Greater bull market, all three of the checks were bullish. MHP resilience never was negative except for that one spot. So right here, MHP resilience is back to positive. I had pretty good confidence to jump back in. The yellow line, MRES, is here. It's this yellow one. Now we have half gap res is positive. So I'm holding all the way to, I'm now the box of support modes here, resilience. Now I'm in a great spot. My every single trade time, every single day, every single time is now supported by the fact that you have res greater than 0 on mode 2. Right, we know this one. So this is now really strong support because this is greater than 0. So you can see how right here it's congesting. It's gonna pop really quick. Hopefully so. Join and learn, Matt. As a class will help you understand this stuff. You'll fully understand. Yeah. You guys have to take the classes because we don't teach in the classes here in this YouTube. We only teach in the actual classes themselves. So like right now, my confidence is pretty good that we go up and fill this. Now the question is, how far do we go after that? Do I want to hold a runner at bull zone? So what you guys saw me today was I'm in a pretty good hand. I get dealt some shit cards. I change my bet. The cards get better. I change my bet. I carefully maneuver into the next trade, and then I get back into my original bet, and there's the pop. Let's go. Come on. Let's go. Come on. Come on. We got come on. Like, it is just not trying to get to that bull zone. That's like the trade I want to happen every single day. Every single time. Res positive now. We're going to flip the polarity on that. The next iteration of the platform, you guys need to get it on the platform now because our half price for Black Fridays for first month is still active. It's only $100 from 200. We're about to draw arrows and probabilities on the charts. YouTube stream will be delayed when I get back in town. But you'll have these probabilities and arrows drawn on the charts now. And when we do that, you're going to have to pay extra for it. So kind of got to get in now. Okay, just want to use our stuff. Confidence is pretty good here. Type 2 resilience, res greater than 0. Every single trade time. Again, I'm going to pound my fist on the table, dude, every single time. I take it every single time. I don't care what happened. I don't care that this happened. I don't care. Every single time I take the trade. It's my bread and butter, man. This contributes very heavily. Very strong trade under these conditions. Again, I can be wrong. It happens. I can stop again. I can get squeezed again. But over time, this trade is a 9 out of 10. If this ratio is greater than half, this trade happens 90% of the time. That's why we say, if people watch me, I always take it every time, no matter what. No matter what. Wonder, JD Ross says, is there a correlation between how big the variance between SPY and QQQ resilience is and how it affects the pivot points? That's worth investigating. The problem is that SPY and NQ have no ties to each other, other than the small overlap of the sectors that are contained in both. So I would say that like NASDAQ is not even a real index. Like it's just the novelty index. Like if you were to draw a Venn diagram, you have S&P and NASDAQ, they overlap like this. And you have Russell down here that doesn't overlap with any of it. These companies are different than those companies. These overlap with a few sectors. So like the stock market is literally this. This is the top 500 American companies that reflect the health of the American economy, yada, yada. This is like your healthcare, tech, and telecom companies that, you know, it's like they have a correlation between NASDAQ and S&P. I kind of like try to teach this to people that the NASDAQ is not a real index. It's just like it's like FANG. It's like a novelty index. It doesn't really have any weight on the stock market. It's a tradable thing, but it's not relative to the stock market. For example, if I was dumping all of my tech stock and buying all energy products, the NASDAQ would be plunging and the S&P would be relatively flat because I'm rotating money out of tech and into energy. The same market cap has just been shifted, but the NASDAQ won't reflect the energy buy. Instead, the NASDAQ will be looking bad. So there's a fair bit of rotation that takes place that you can't see because of this. You can make an assessment. Why is NASDAQ down and the S&P is up? Well, it's because people are rotating out of tech heavier and rotating into energy or finance faster. Let's find out which one it is. Is it finance? There you go. Look, my first guess, it was finance. Look how good that is. People are rotating out of tech and rotating into finance. I've done this long enough, I can guess it pretty good. Energy, kind of same boat. People are rotating out of energy and kind of back in flat. But I would say that maybe tech is the weaker today. And tech is definitely not rallying. It's opening flat. Right? So as you see, all of them kind of look the same. But people are rotating harder into financials because that's the one that's rallying. You see that? So because financials is the one that's rallying, that's why the S&P looks good while the NASDAQ looks bad. See, you guys do this enough, you'll get as quick at guessing as I did. My first thought was financials. And you can check your sector spider chart so you can see which one is the rotating part. So the problem becomes this doesn't really show you what's happening, but you can take a guess. If they're both trending up, but one of them's higher than the other, then it means some of the sectors that are outside the Venn diagram are outpacing the ones that are inside. Let me repeat. Tech, K, communications, finance, energy. So if they're both sloping up, but this one's positive and this one's negative, it means something that's shared is going down faster than something that's in the S&P is going up. Easy to see that. So the fact that they're both going up means that it's just likely one of these that's selling off really hard, and even some of the shared ones are also going up, but not a lot. So if they're all going up, it means the majority of this is going up, but if NASDAQ is lower, it means one of the sectors has sold off pretty hard. And that's kind of what that tells you. So the question is, JD is a great question. You wonder if there's a correlation between how big the variance between the two are and how it affects the pivot points. S&P is likely to yank the NASDAQ around. So if the S&P is moving up, it's going to bring the NASDAQ up with it because of the sharing of the two. But NASDAQ, if NASDAQ's moving down, it doesn't necessarily mean the S&P is going to go down because the S&P has other sectors that matter. So if NASDAQ is going down, the S&P could be going up. If people are rotating out of, like, if people are selling a little bit of tech and buying a lot of energy, then the S&P would be like this and the NASDAQ would be trading down. And it's rare that happens. Around earnings, you'll see this a lot where one of them's red and one of them's green. But very rarely is the S&P, like if the S&P starts crashing, it means that money is leaving the stock market in general. All the stocks, people are going to cash. So the NASDAQ will reflect some of that because there's healthcare, tech, and telecom and other sectors. If the S&P crashes, the NASDAQ will crash with it. If the S&P rallies, the NASDAQ's going to likely rally with it. The NASDAQ crashing has no effect on the S&P. The S&P just exists like the NASDAQ is not even there. But the NASDAQ has got some overlap with the S&P. So if people are fleeing the stock market, the NASDAQ will feel it. And that's kind of the way you look at it. It has been proposed to create sector resiliences. And actually, one of the proposals that we had was to create a resilience creator such that you guys can grow. There it is. Every single time. Every single fucking time. Every single time. My money back. Fucking green for the day. Fuck out of here. Listen, guys. I don't care if the market runs in circles. I don't care if the market crashes and comes to here. I don't care if the market flies off the handle and comes to here. I don't care if the market goes back in time and then comes back into the future. I'm gonna have a heart attack shouting this. This shit jumps the time machine, goes in the past. Fuck. Every single time. Every single time. I cannot stress that enough. 90%. It's been, now again, question is, what do I do from here? Days like this are kind of eh. I'm probably just gonna sit out. If this candle decides to jump back here and start trading here again, and we go back in the past, I'm back in here, whatever. Have a shot of tequila. Look, listen. I'm barely green. I'm green by a couple $100, so don't celebrate too early. That's better, as my dad would say, it's better than a sharp stick in the eye. I can't complain. My dad has some very violent dad phrases. Like, fall off your bike, skin your knee, you're bleeding. And he's like, well, quit your bitching. It's better than a sharp stick in the eye. Who used to say that when I was a kid? I wasn't lying. I think anything's better than a sharp stick in the eye. Basically means when you have it bad, it's not really that bad. Rub some dirt on it. Wait, you say that all the time? Boomers, let's fucking go. Oh, that's hilarious, Jerry. You're like, thanks, Dad. I just wanted a hug. It's like, quit crying. Quit your bitching. It's spelled like this. Quit your bitching. All right. My dad is 60. What year is this? 2020. My dad's 65. You're my dad's age. That's cool. My dad was young when he had me, though. My dad was like right out of high school. English expression, better than a poke in the eye with a sharp stick. I think it's a Texas dad thing too. A lot of other states are like this, but in Texas, you know, you like rough your kids up. You're teaching them how to play football. You know, we're kind of like rough down here in Texas, so there's no excuse to be a wuss. Dads are always trying to like, yeah, walk it off. You'll be fine. Dad, my leg is broken. Yeah, rub some dirt on it. You'll be fine. What would be a good target for Bull Zone? Bottom chow and ES? Always DD ban. Always. Where's the DD bands not showing up? Oh. Oh, because I did that. Okay. I remember I need to relog into my futures. Okay. I need a hard F5 refresh again. You guys don't do this, but I should log out and log back in. But I can't do that on the stream. Here we go. Because I had disconnected earlier. So if one were to take the trade here, now again, I'll be very cautious because of the way the market has moved today. I'm gonna let whatever happen, and if it reclaims it a second time, I'll long it to there. I won't necessarily jump in on this first one. I'm gonna let it settle out a little bit because the market is trying to fight over here. It definitely is trying to go up. So let's just be real. Like, I'm gonna take the every single trade time one more time. If I get it, actually I'll stick around and try to do that one more time. Let me just wait one more time on this. Remember, Nasdaq is still not that hot. VIX collapse, that's good. I want to see that. Yeah, so QQQ, one tap. Let's see what happens here. Nasdaq is still looking slightly weak. That is the problem today. So that's why I'm not super excited about taking the chase here. Nasdaq still hasn't fully repaired itself, so Nasdaq's gonna have a hard time inside of here. So Nasdaq is probably still gonna have some fight. And if that happens and this repairs, then it's worth taking a later trade later in the day. But I'd like to see this look a little better. So Nasdaq's still being kind of weak. It means some of the stocks aren't as strong, right? We'd like to see both of them strong to see the market move quickly. So it looks like your tech stocks and some others are not necessarily, they are retesting their gap. We're not getting a lot of momentum on them. But like I said, I'm not betting on the market selling off. I just like to get a better entry. So maybe because there's a little bit of selling, let me see SPY pull back a little bit, but we'll see. Yeah, definitely to DD band is a decent setup from here. 60.23 to about 53. That's about a 30-point rip. I mean, not gonna lie, guys, our futures monthly hedge pressure is like one of the best pivots on the fucking planet. This comes from our bot. We post in our Discord every night. Those levels. I didn't even notice that today because I'm on my laptop, so I normally have my 4 screens up on one and futures on the other, so I'm actually thumbing between them. And you guys are talking to me about like some tech support stuff, so I actually missed this, but people are shouting about it in chat. This is so great. QQQ from hedge pressure to bull zone might be, yeah. Would I short here and why? Laurent. All right, I'm gonna make 10 people do push-ups because you asked me that. You're in the doghouse, bro. I'm gonna make you stand in the corner and stare at the wall for 10 minutes. Tell me what you did wrong. I only short in 3 places. And never changes. Never changes. Never. We open here, tap this, I short every time. You nailed it, baby. You know it. Not with resilience. If we're here, I short this every single time DD is bearish. And then DD band at the top, I short from there if DD is bearish as well. Those are the only short setups I have, and I religiously follow them. Just because I'm out of the long trade, I'm never trying to short a bear market. Even if it pulls back, my brain is waiting for it to pull back to assess a better long entry. Greater market's bullish. All three things are positive from yesterday's class. There's nothing really trying to short. And there's a lot of people today that probably saw this and they're trying to short. And they're going to have a bad time with this, as this is more likely to like do that. So these days are pretty easy to identify. CPI made it flush harder than normal, but in reality, longing here again, that is the trade. That is the trade for the day. Buying from here to there and closing out is the trade I take. Buying from here, doubling down from there to there and closing out is the trade I take. And this is the trade I took ultimately. Even though the first attempt stopped out, the second attempt was a win. So after this, my brain is like, okay, where can I be a bull today? Right? So I got my back pocket trades that always are good. This one is always a great one. If res is greater than 0, so we've got support there, support there, support there. So I got all kind of places to go back in on the long. With res greater than 0, and the fact that we open in the middle, we're likely to close in the middle. So anywhere, if we fall, I'm longing again. So that's the whole point, is that probabilities are high that we close and open in the same spot. Probabilities are low that we close down here. Expected that we close in the middle. And this is low that we close above. Okay. So I've got supports at bear zone top. I got supports here, here, and here. So inside of here, my brain is like, I'm going to long again. Yeah. So Laurent, right, you nailed it, bud. I wouldn't be shorting this at all because there's no really good short setup. But see, I'm not chasing the long either because, like I said earlier, we're not getting a lot of love from the tech side of the market. It's still a little kind of blah. I'm glad I got out when I did. Scott yelled at you, not a short setup. Scott knows, he's been here for a long time. I'm very, very particular about shorting markets. It's like so rare you'll see me do it because everything's gonna line up. I didn't move up to 80% win rate by shorting markets. I long pretty much every day. It's rare you'll start seeing me short markets. There's a little magic to that. The greater bull market. It's not really a lot of good short setups. To me, red candles are an opportunity to buy in this kind of market. Right. I mean, every single time, should I touch it again? We're getting close. What's going on with Qs? Like I said, Qs was a really hard one. We're not getting a lot of steam. Resilience on Qs is still negative, so Nasdaq is rejecting while the S&P is supporting. Now, over time, usually S&P is going to go up. That's why Nasdaq is doing. But I think right here is the equilibrium where it wants to be at. So wait for the pullback. I'm gonna let it pull a little harder. I'm right in the middle. It's not. I don't like trading from the middle. So I'm gonna grab one of those lower pivots. It's expected to close in the middle, so this is like the expected end of the day. I'm not gonna buy at the middle and then play the chop game. I'm gonna grab an extreme pivot if it falls. Man, I love that my hotel has free continental breakfast, but I hate that the eggs the last 2 days have not been fully cooked. And they're not even like real eggs. They're like I guess the eggs that come in a carton. I guess they're real eggs, but the texture is weird. They're kind of like liquid a little bit. Not that appetizing. No, these are second entry points. Still looking good here. Let me let it tap bears on one more time. Res is positive, so it might pivot from here. I'm gonna get maximum push on this trade though. $36.7. I don't want 7 points on S&P. Let's get a full 10 with a little bit of drawn on this. I'll put 1. My confidence is better. Oh, let's see. This bounce, good. This bounce, equally good. It's not higher, but still good. Definitely still good. Definitely not real eggs. Like, are the eggs that you get at like hotel continental breakfast? They're like eating like runny sponges. It's like the consistency is interesting. It's kind of like a sponge. Like it's like aerated in a way. It's not dense like an egg. I know there's not some Michelin chef back there like emulsifying it to make it fluffy. I feel like it's kind of emulsifier or stabilizer or something in it. The milk carton eggs, yeah. When's the probabilities data doc going to be released? It's all in the 20 days class right now. You can piece it together. One of my employees is putting together our media person that does all our marketing and commercials and stuff. Her job right now is making new cheat sheets with all the stuff. I should have all the probabilities data on it. Here's the thing, it's going to come out on the platform. So when our next major updates, the platform will have all the information on it. Maybe even the better part. Watery egg sponge. I'll make you a plate, Scott. But they're normally good at this hotel. I come here a bunch. But today they were, I don't know, they were like, there was like a little liquid in the pan. It's like they weren't really cooked all the way through. I wasn't a big fan. I wasn't a big fan. ERX was like, not gonna lie, you love hotel breakfast. I'm telling you. When I'm doing work stuff or on work trips, just me by myself, I definitely go for value. I look for the following things. I look for free parking. I look for free breakfast. I look for good Wi-Fi. And Marriott. So when I'm on like a pleasure trip. Oh yeah, I'm going Friday. Extended a couple days because I'm out of town. For 2 free lifetimes. You'll have lifetime access to everything we do and the coaching and all that stuff. Lifetime. Yeah, right now I'm pushing really hard with the dev team for our next project. The connection stuff is what our key focus is on right now, is all the connection stuff. The only thing you do like about shorting intraday is the trade lasts about 5 minutes, it goes 40 points. That's basically it. If you guys have a short setup, you nailed it. Especially in a bull market, you're in and you're out quick. Don't ever short for markets to crash. Get your quick dip and close out in bull market. Yeah, Robert, if you go to Lifetime, you get all the future updates at no cost. That is correct for Lifetime. So Lifetime is like, for that particular purpose, yes. And that's like the majority of our members are actually Lifetime, because they start doing the math in their head and realize $200 a month adds up pretty quick. So basically, Lifetime will get future additions to the platform at no cost. So if we make a new tool, a new indicator, a new this, a new that for the platform, you get it at no cost. So limited to like the software. Like if we bring on like another trader or another coach, the Rocket Scooter in the future, and they sell like a training service or training program, Lifetime is the purview of the Lifetime is platform and anything inside the platform. So like additional coaching or additional other things in the future would be outside of Lifetime. Usually Lifetime is just platform updates, platform tools. It's rare that we'll have something that Lifetime would have access to. To answer your question, yes, you'll get everything. Everything on the platform. All updates. And our new updates are all going to be like a la carte costs. So like the monthly, we'll have to do add-ons, like $10 for this, $10 for that, for new tools, and they can piece together what they want. Lifetime is just you get the buffet. I get futures data for on Rocket Scooter. So you pick any broker that works with CQG. That'll be, you know, Amp, Edge Clear, Phillip, Dorman, Iron Beam, Cunningham. All the big ones, big FCMs. All you need is an account with one broker. You contact that broker, make your futures account with them, and then get a CQG login. Tell them that you're going to connect it to Rocket Scooter. It should be fine. They'll know who we are. And then they'll give you a login for CQG. And that login just works on our platform. Are DD levels going to show on the new version? Yeah, they do. Bull Bear, they do. DD levels do show up. You have to have a futures data feed connected, though. If you don't have futures data, they won't connect. So like right here. Or did you mean the oh, you're talking about MHP levels. These ones right here. These are called the dynamic hedge pressure, i.e. futures hedge pressure. Right now, we are building the black box for this right now. We are building this. It's almost done. So what the bots put out every night, it's now being done. And I'm going to be getting test data probably early next week. Jerry says Lifetime was no brainer. Price at NES mini handles drop in the bucket. That's like a day worth of trading. Yeah, and like all the proceeds go to further developing the platform. So, you know, you guys during Lifetime, you're basically committing to us continuing to make cooler stuff and doing better studies. Imagine like in 2016 when all we had was risk interval. 2019, I built what was called walls, which became zones. A little bit later than that, I built hedge pressure right for 2020. We put it into windows of opportunity, which ultimately became liquidity maps. 2020, 2021. We built this platform in 2022. Before this platform is just a tiny little app that everybody here, the old schoolers remember, a tiny little app that just had the zones, or actually the walls at the time. And then hedge pressure was a number, and monthly hedge pressure was a number, and resilience was a small graph. We had a tiny little app that people would subscribe to. And then in 2022, we built it into a platform. We incorporated TradingView into it, and everything kind of now is on the chart. And the last thing that needs to be automated are these dynamic hedge pressures. We're building the backend for it right now. And then so if you have a futures data feed connected, they're going to draw on your futures chart, just like the D bands. So right now we're hitting monthly hedge on NASDAQ. Unfortunately, this is kind of like what's going to cause the market to likely pivot some more. Kind of like probably going to be done for the day. If this reclaims this is a great long setup to DD, but if it fights and it pushes back and holds that and wins, then we'll see. Well, NASDAQ is likely to stay combined on the same side of MHP it opened on. It opened above, so NASDAQ wants to be above. So anything above here is good for a roll to there. Yeah. But it needs to reclaim with confidence. So right now it's obviously gonna have some rejection there. This music is very awful. I agree. It's a generic playlist they were giving a shot to. I agree. Let's give it a few more songs and we'll kick it out. I'm gonna make my own playlist of AI based songs about trading. Maybe we'll have a contest like the best AI based song. How come MHP on mini NASDAQ and on QQQ are totally different levels? Because NASDAQ futures and QQQ are totally different instruments. They're going to have their own balances. Good question. So the futures dynamic is printed in the overnight in the Globex session. The MHP for the equities is printed in the morning. They're different and they pivot into each other. So they're both like when we have it all in the chart, we're gonna have like a super strategy in a way where you have MHP here and MHP down here. They're both gonna pivot into each other. Like this is the newest development this last year, as people have found out that you have a probability here that you stay on the same side, then a probability here that you stay on the same side, which the hedge pressure was here. This is NQ, this is QQQ. So in 2025, I forecast a super strategy with even heavier good probabilities by combining the two. As our members have discovered over the last couple of years, is that the overnight dynamic hedge pressures pivot during the day session as well. They are so freaking strong. We use them for just overnight trading, but as the years went by, some of our folks are doing back tests on them. And one of our guys right now is actually doing a back test, Andrew is, to test the same feasibility. What's the probability open and close here? So with both of them together, it becomes a super strategy. There's for the sector resilience, JD. I'm sorry, I kind of trailed off with telling that story. We're gonna make it. We want to make a resilience, a resilience tool. Like over here, you click res, okay, and essentially, you can build a watch list with any amount of stocks that you want, and then you can like click a button that says res. And it will make a resilience indicator out of a watch list that you want. So the idea would be you can build your own FANG resilience, your own basket resilience of things that you watch. And then of course, we'll have pre-made, we'll call this like resilience custom. We'll have some pre-made custom templates, which will basically be like, every single sector, right? Res C, Res K, you know, Res E. which would be pre-made with those baskets, but essentially like a create your own resilience template. You want to make one out of FANG. You want to make one out of you instead of typing in all the tech sector stocks, we'll pre-make them. But yeah, we wanted that's my dream. It hasn't been scoped into a project yet, was to make like a build your own resilience tool. And like when we release the new rocket script code, this will come in 2025. The marketplace shifted that about a year. We wanted to release that this year, but marketplace kind of took all of our focus. Next year, all the platform stuff is being released. It's already done. We just got to make the interfaces for it. And then with that, we're going to come out with some pretty cool tools and platforms. When do I stop? Does that make sense to trade M and Q based on the QQQ MHP? Yeah, so you trade it all. So you trade M and Q off of both of them. So they're both useful. Like the super strategy would have both QQQ and NQ MHPs together. Oops, let me. So for example, off of the low, it's about 100 points lower for MHP on Qs, right? So about 100 points lower off the low will put us right at about 20.060. So you'd be right about here. So you'd have like a super strategy where the market's likely to close in here 90% of the time, and then likely to close up here 90% of the time. So you would have like both probabilities together for Nasdaq futures. Yeah. So the super strategy is to have an incorporation where once we start drawing lines on everything with like probabilities, oops. And then like down here, you have another thing like this. Of course, this number would dance around a little bit because it's converted. But the idea is it would stack with your DD band. So you have like a very high probability we close in here. Very high probability we close up in there. Yeah. So in the future, the idea is to have all of it together. When do I stop using overnight monthly hedge for sure? Borja, never. It lasts all day. And when the futures market closes, we give you a new one for the next day. So 23 hours use it. So 4:45 Central or 5:45 Eastern, when futures market opens 15 minutes pre-market, we post that number. And then all through that night session, all through the next day's session, the numbers pivot. I think it's hilarious. Sophia's on the same page as me. The only thing she said all morning was this music is awful. I agree. I'm in like a never-ending search of finding a copyright-free playlist that's decent. Yeah, I'm kind of like waiting to see if the market just gains any more like oomph to it. Unfortunately, I don't think it's going to sell off, but it's like the conditions are good. S&P is good. S&P is good. QQQ is still like kind of booty. So it's like QQQ is not going to have an easy time pressing through here and also pressing through there until this goes positive. So with some of the sectors weak, QQQ is just telling me that some of the sectors are weak. If both of these are positive and all the sectors are strong, market's looking good. But since we're seeing a fair bit of sector rotating, people are jumping out of tech and jumping into energy is what we're seeing. The market is just shifting that market cap around. It's unlikely to pick up a lot of momentum until all the sectors are good, which means this one is positive and this one's positive. So if Nasdaq starts to turn positive, then everything's probably going to rally to DD band, which is kind of what I'm waiting to see. Seeing that you have weakness in some sectors and S&P is basically showing that we're rotating. So the S&P is pretty decent. As you see, certain firms were dumping tech really heavily and jumping right into energy, as we showed earlier. The tech is not picking up much steam to continue S&P moving. It's such a heavy part of the market cap. You're going to need tech to move to see the rest of the index move faster. So it's a slow crawl from here. I'm not going to bet on breakout long until Nasdaq repairs itself. And that's what I'm waiting for, Miguel. As Rocket Scooter gets wider adoption, you see the probabilities changing, so MHP, HP won't be as reliable. That's a great question. So in technical analysis, one would assume that the more people using something self-fulfills that thing. The reason technical analysis worked for a small period of time is because people were using it. And Bollinger made his famous paper, and everybody bought Bollinger Bands and reversed Bollinger Bands. People started creating the thing that it did. It's self-fulfilling. If everybody buys at a certain place, it's going to bounce. If you convince the world to buy something for whatever reason, and everybody's using that reason, and everyone buys, and that reason works. If you're what the fuck's the name, Zach Morris, and you tell everybody to buy some shit stock, and everyone buys it, it's going to go up. Therefore, he's an indicator. But the indicator has no inherent properties that make it work. The indicator is just influential. So technical analysis worked because a lot of people used it at the time when there weren't a lot of traders. Retail wasn't around because you didn't have computerized trading in the 60s and 70s. It worked. The more people that use something, the more that it works. And that principle alone, that principle has always worked. Like, I convince everybody in the world to buy a stock market when there's a full moon on a Thursday. The more people that do it, the stronger it becomes. Well, the question you're asking is a good question, because the idea is, well, other traders catch on, and therefore banks will counter what you're doing. And that's a legitimate question. If you have arbitrage, somebody else is also going to find it and trade it faster and better than you. And the more people that know about it, the less it's going to work. If your trade requires exclusivity, then the more people that use it, the less effective it is. An example, if I notice that every single time, I make up something. If every single time oil ticked up, 5 seconds later, natural gas would tick down. I'm making up something that does not happen, by the way, but I'm making it up. Therefore, the fewer people that know that, the better. The more people that know that, then it's a space race as to who can execute the trade faster. So the more people that do it, then the gap on the arbitrage closes out. The answer is yes. So if your exploit requires exclusivity, i.e. it's arbitrage, it can only be you that's doing it. Hold on. What's it in? Trash can? What's the reference? So the what was I saying with that? No. Thank you. So the question is that if more people use it, it can diminish the quality if it requires exclusivity. So this kind of trade setup, now not that we're aligning the world to buy or sell at the same spot, we're not manipulating the market, but it's like a technical indicator. The more popular it becomes, the more it's acted upon. Now, why technical analysis is less useful these days is because there's less people using it. There's more variety in the stock market. Tools available. People are using so many different strategies that not everybody's buying on the 23.6 fib or 32.8 or whatever those numbers were anymore. They're not as effective. Overbought and oversold, not as effective because there's more traders trading different strategies. They're spread out. They're not all acting at the same place anymore. So if more people adopt Rocket Scooter, two principles. Number one, it's a pivot-based thing. If technically everyone in the world bought hedge pressure, then it's a space race to who can buy hedge pressure faster. then all of a sudden it's going to start pivoting before hedge pressure. And therefore, it's going to be a race to whoever can get in first. And as time goes by over and over and over and over again, with infinite number of people trying to step over each other, could diminish the effect of hedge pressure ever being touched. Therefore, if hedge pressure was never touched because everyone's trying to get in ahead of it, an infinite number of people do it, then with infinite number of traders, then hedge pressure will never be touched. Therefore, it will become obsolete. So the way that we would counter that is we would create an indicator that would adjust the effective hedge pressure based on the effective trading activity to understand how much it would undershoot. And like you always encounter the method I'm trying to say is there's always a counter to the counter, and you counter that counter. The next thing is that could the market makers, institutions understand and recognize that phenomenon? And since everybody's winning from the house and the house knows where everybody's trading because it's the most widespread use of information is that everybody buys at this one spot, could the banks decide to flush everybody at that one spot as a counter? And the answer is yes. So can the market makers themselves or the traders are trading against use brute force to squeeze out everybody at that spot? So become too big, that's the recognizable problem. Was that the banks encounter you? But the problem is for them is there's no unified market making system. It's a bunch of independently acting entities. They're all in the same game. They're all providing liquidity to the market. They all get paid to do so, but they're not cahoots with each other. And hedge pressure is the net sum of their risk. So as long as they're not organized, the banks are competing more with each other actually than they're competing with you in the trading world. So because it's a net competitive game between them, they're not lying against retail. I think that 1 million people could use Rocket Scooter and buy at the same spot, and it's still a drop in the bucket compared to the amount of risk the banks take with each other. So I don't think the banks are going to lie and say, we got to crush retail together and work together. Because I don't think we're ever going to make more money combined than any one bank makes on its own, fighting against everybody on its own. So, and the fact that delta hedging principles and gamma hedging principles and Greek-based hedging is universally accepted by all actors, even though they're acting independently and not in cahoots. Mathematically, they're all kind of in cahoots without organizing themselves because they all use the same math and hedge the same way. So therefore, mechanically, hedge pressure and monthly hedge pressure can't break because as long as Black-Scholes is a thing pricing options and Greeks are a thing that people use to hedge with, everyone is using delta to hedge with, then you will always have high volume hedge pressure no matter how many people are using it. It's unavoidable and inescapable because it is an intrinsic part of the market, something that everybody's doing no matter what. Organized, not organized, banks teaming up against you teaming up against banks, everyone's still hedging at the same spot regardless. So because of that, it's almost like it's an intrinsic inherent part of the market regardless. So hedge pressure and monthly hedge pressure almost have immunity as long as Black-Scholes is in existence. So even if all the banks decide to get together and counter what retail are doing, the assumption that infinitely people use Rocket Scooter, the banks would have to create a new method to price options, get rid of Greeks altogether, and come up with a brand new strategy. But unfortunately, at this time, there is no better way, as Black-Scholes is the mainstay and has been forever. All right, I'm done with this playlist. Oh my God. Everybody wants to be an artist these days. It's a no for me. I'm like Simon. Call. Well, no. I just buzzed you off the stage. So that is so the idea is that unless a new paradigm is created for pricing options and hedging positions, there is no counter to this. They'd have to collectively create a new method and then use it, and then all we do is create a new counter to their counter. So we'd have to create a new way to measure it. And so the rate at which pricing mechanism for options is going to change, I don't think the Greeks are ever going to go away for 100 years. So the idea is if they counter, we counter. Like options were created, Black-Scholes was created, Greeks were created. Then in 2022, we took that publicly available information and then we figured out information from that. If the independently operating banks decide to collectively say, retail finally figured us out, they're having an edge, which will take hundreds of years to develop because, again, there's not 10 million traders using this. There's like fewer than 6,000. It's dropping the bucket. We're not even being noticed. So the chances are we'll never be noticed. We'll never be that big to be noticed. We're not like raking in millions, like hundreds of millions of dollars a day as a crew. Then they'd have to create a whole new options pricing paradigm, which unfortunately, Black-Scholes is the best way to price options. There's very little mechanism other than pegging options to the risk-free rate to give it value. There's really no better way to price options. And if they created one, that math would be known and we would just create a new hedge pressure. Hopefully all of us are super rich by then. Good. Thanks for the map. No problem. No problem. How does Rocket Scooter factor options expiration, different strategy for gamma zones? 100%. So it's built in. Without going too heavy into the details, we factor in all the Greeks. So what we've done here. So an example is each one of these dark gray boxes and light gray boxes is this expiration. Let's take an example. December 18th, whatever this is. Okay. I think that's probably 18. On this day, these are options that expire on that day. This is the monthly map. So what we look for are calls that have been purchased and puts that have been purchased that meet a certain amount of criteria. Typically, these calls are in a tandem trade. They're tandem with short trades on the market made by market makers, and we have a way to identify that in the order feed. So calls and a short, in this example, it's QQQ. So as you can see, Robert, it's a neutral trade. Buy calls, short the underlying. Great. If you short via delta, you're perfectly delta neutralized, right? Short is a function of delta, gamma, theta, etc., all the other Greeks. Then you're fully hedged. Not only hedged at current delta, but hedged as a forecastable partial differential of each one of these Greeks, how it would affect the price, right? So certain hedging models contain like almost all the Greeks, gamma, rho, name it. They're all in there. Some of them are just classic delta and gamma. Some of them are theta only, different kinds of hedging for different kinds of positions. But what we look for, we try to identify the calls that are part of like hedging strategies. We have a way to do that because we look for tandem trades in the market. So the reason a market maker will be shorting a market is because there was actually no organic seller to the market and it had to be them, and they neutralized their risk waiting for a seller to step in. So if there's a big seller to the market that doesn't exist and market makers are selling, it means there was a big buyer or an implied big buyer, like somebody that just has naked calls and they're in the money. So basically, this is the identification of big buyers by reverse engineering that they exist there by identifying the market maker calls. And in contrast to that is the sellers. There's a big short right here. So far, so good, Robert. And we're looking at all the Greeks inside of our hedging model. So our hedging model is constantly running and watching the options order flow. At the end of the day, and the beginning of the day, we're utilizing certain functions in the Black-Scholes equation to calculate where these zones are. So bulls are here without a seller. Bears are here without a buyer, sorry. So here the market makers are short the market, or long the market against the bears, and here market makers are short the market against the bulls. You understand, Robert? It's inherently built in, and that's just for this day. And this day, the spread is here. And this day, the spread is here on each one of these expiring days. So monthly map is showing you how that risk distribution has changed over time. Monthly map is a very awesome parameter that, if you see in the cheat sheets, tell you what kind of market we're trading. So in our Discord, we have this little section called cheat sheets. And inside of the cheat sheets, it explains a lot of these things. This one in monthly maps particularly shows you if the options distribution are changing, that you can identify if bears are short squeezing or bulls are getting out of positions or bulls are entering positions or how the volatility is changing, etc. So this is actually showing me like, is the market bullish over the next 3 months or whatever based on individual days of expiration. Now, today's daily setup, we would just click the daily button there. What it does is it balances all of those days that are daisy chained on the individual expirations. Then it crams all of that risk into today's pressure based on all of those options balanced for now. So we do the time-based Greek balance to balance them off for now. For example, January and December's weekly options are factored into this liquidity map, just adjusted for the time difference. Now, does that make sense, Robert? So how do we factor in options expiration? Is that there's a risk value to not only, or there's a pricing value to not only every part of the partial differential equations. Like delta has a function, right? Gamma has a function, theta has a function, and each one of those are based on some kind of partial differential of the old Black-Scholes equation. Essentially, each one of these is particularly responsible for the valuation of the option. So how do we utilize different options expiration is that some of your Greeks are time dependent. So the time itself has a value. Just like here, the rate at which the underlying goes up versus the price of the option goes up creates a valuation. Delta is a speed of that change in options price. Gamma is the acceleration of the change of the option price. Theta is how sensitive that pricing is to time. Some of them are how sensitive that pricing is to volatility. So each one of those Greeks, or i.e. the entirety of Black-Scholes together, is utilized inside of our model. So since you just asked expiration, then it's clearly the time-based Greeks that are used to cram everything together. So right now, everything from today's expiring options to December's to January's are all factored into this bull zone today. This is where all of those bulls over the next 3 months as a net sum of risk. And it, again, it's each one of those days are balanced for time to create today's liquidity map. So, yeah, you'll love it, Robert. You can do it, yeah. Well, like, you know, I went to engineering school. Like, my degree's in chemical engineering, and I used to teach fluid dynamics at the University of Houston. And so fluid dynamics, when you're looking at, like, one of the major equations we study in fluid dynamics was the Navier-Stokes equation. And like when you're starting to study Black-Scholes, you realize that like the structure of some of these equations, I'm a mathematician by background, I went to engineering school, but like we used to do all kind of mathematics around, this is fluid flow and conservation momentum type equations. And when you read about like the structure of some of these, they look a little complicated. It's not too dissimilar from Black-Scholes. Deriving stuff from that wasn't hard. It took me back to my Navier-Stokes days. So you have your Black-Scholes differential equation right here. Essentially, each of the Greeks are very well defined. They've already been solved. You really have to go solve them yourself. They're already solved. It wasn't really too hard to create models out of this. It might sound hard if you don't do math, if you don't do like a lot of math heavy stuff. But they train us how to do that in engineering school. So
So like we used to use those equations. So I would like but basically I would teach kids how to derive those equations when I was teaching. Yeah. Momentum conservation Newtonian fluids. I know that just made everybody super turned on to hear that. Math talk is so sexy. But it's basically like a complex system with multiple variables, and that you use the Greeks or like independent relationships inside that equation. They call them partial differential equations. Most of you guys probably took PDE in school. Y'all know how that works. But can I understand Common Core math? No, I can't. It makes my brain hurt thinking about that stuff. It was somebody's job to invent that, and that person needs to be fired from a cannon into the sun. Literally. That's my favorite Futurama quote. I love that quote. Leela said it.
What if I refuse? Then you'll be fired.
This is like literally my favorite Futurama quote.
What if I refuse? Then you'll be fired. Fine. Out of a cannon into the sun.
Oh yes. That was actually from the very first episode when Fry was getting assigned his job as delivery boy, and he's like, "What?" He's like, "Oh, delivery boy. Your kid's homework is kicking your butt, dude." I'm telling you. Like the way I learn math is really like the way I see numbers is kind of different. I think them like basically I see numbers in a weird way. It's like maybe like a feeling. Like if you put like, I'll write some random numbers like 3, 6, 4, 8, 7. You're like multiply that by like something, right? I'm just gonna put like 15. And like I'm like, okay, I don't do any thought. 5 and 7 to me has a 5 and a 3. Like I go, okay, there's a 5 and a 3 in that. If I think 4, something just feels off. Like that's how I describe it. It's like I'm not consciously thinking about what each relationship is. It's like it's a feeling thing rather than anything. It's kind of like if you're a painter and you're painting trees and then you grab like a blue and you brush stroke blue against all that green, it just kind of feels off. There's like for me, it's a little bit of intuition with numbers. So my son has the same exact like patterns when I was a kid, according to my mom. So I think he has it too. He just thinks in numbers, and it's like it's not conscious, and it's not. So Common Core is like thinking in steps, and I think that they try to create a way for somebody to like brute force some kind of math between this. Some people just don't have the ability to see the numbers, and your brain just works out what it should be. Like when I see this, I didn't think about it. My brain just goes 35 like this. Then my brain goes 43 like this, right? Then my brain goes 24 like this, etc. And so like my brain is always feeling like, and if I do something wrong, something will feel wrong. And it's just like it's like not conscious thought, I guess. That's how I normally think of numbers. When I was younger, I was a lot better. When I get older, my brain has turned to mush. I've been to too many music festivals, if you know what I mean. Can I explain? Probability disclosable zone or liquidity zone, please. So under ideal conditions, that you're here, these are non-ideal conditions. So ideal conditions, open and close same zone, roughly 90% on the major indices. Under non-ideal conditions, some of those lights are red, it's roughly 70% of days. So it's number of days that open and close in the same area. And so
It doesn't matter what it does. We look at the close. So an example is here. These conditions, 70% of days, that will be where we close. That doesn't mean that's support for the trade every single time. It can be like today, IWM, this would be great support for a trade. But what it means is that like down in here, it's only like a 30% chance we close below here. So the probabilities for the index are pretty much the same zone. So open middle, open bear, close bear, open bull, close bear, close bull. So roughly 90%, this is based on the S&P, same side, if all these lights are green and yellow, and DD ratio is favorable to the zone, like positive, this would be greater than half, then we call that like ideal conditions 90% of days, which is why under ideal conditions, that's my favorite trade. That's my other favorite trade. Here to here, under all the ideal stuff. Now this is non-ideal, which still means like, you know, roughly 70% of the time, 60 to 70 is kind of normal. It's still greater than half. Does QQQ hedge break? So if the hedge is broken at the moment that it is broken, then it lowers the probability. If any of the indices have a hedge pressure break, it's a warning sign for all of them. So QQQ doesn't have a hedge pressure break in equities. It only has the one in futures. We haven't factored the futures hedge pressure break probability into those numbers, but Andrew right now is piecing together our overnight data to see if we can't come up with another assessment. So right now, if you're asking about this one in QQQ, this one has not been factored into our irrational rules. And the question right now is, should we include it? And we've been talking about including it. Chase, I haven't backtested bear zone to bull zone with resilience because resilience has been determined to not have an impact because the DD trade is stronger. But you are correct. Theoretically, could a negative resilience lower the probability of that bear zone to bull zone trade? And the answer is it probably is. My guess would be it might turn 90% to 80%. It's still so strong, I take it anyways, despite resilience. But it would be good when we have our backtest module to have all of our tools built together such that that's factored in for the actual accurate probability. Like it would backtest all the cases where resilience was in the middle of the zones, like you said, and see, is there an impact? Like here, if res is negative, does the probability of this trade change? Do you hit this before you stop the same amount probability or not? That's a great question. Yeah. Not back tested it yet. Yeah. What I normally do is I take it lightly. Like I close some out and trade it light. So what is the strongest impact, overnight futures or daily index? You're always using daily, not the same with overnight. Oh, I am. I'm just, so the way I normally do it, I'm traveling right now. I normally will have my futures chart open. And then I'll have like my equities charts open on another screen. I'm watching both at the same time. So the main takeaways is that you're utilizing what we quote unquote call the 90% rule on both. Let's look at SPY. S&P futures
and S&P SPY at the same time. So you have that. This is the 90% rule because this is about where MHP was on SPY. This is where it was in futures. So as market is trading, you have two sets of rules. Here is where you open. So 90% of the time, you close above where you open in equities. Going back in time, futures opens here. Here. So futures also has a 90% chance you open above there as well. So at any time you enter the market to start trading, like here we go, market opens right here. Then you have both of them. Market opens here. And monthly hedge pressure is the main pivot point that we're talking about here. Here, then it falls to here. 90% chance above here. And it falls to here, 90% chance above here. So I can long and long again, technically speaking, to take that trade. And so the super strategy includes both of them. We're trying to find a way to get it incorporated on the chart automatically as like our next steps are to do that. But I do in my head understand both of those things. That's a great question. So they're both in play. So whenever I'm looking at my SPY chart, my brain is always like, okay, you have another 90% and a 90% here. So while I didn't necessarily use this today, I should have. I just was busy because people are yelling in tech support, and I'm only have one screen. So all right, I don't think I'm making any more trades today. Now I'm probably just gonna call the stream. And shorts and longs are just longs. So the probability is that you open and close on the same side. That's what we measured in the probabilities. So you open one side, close same side. Open another side, close on the other side. So in this particular case, when you open above, it's part of one of three indicators we call the greater bull market. The square in half monthly map shows bullish, which it did. And opening above this MHP, then that's a really strong bull market. I'm looking for longs and strong bull markets. So market falls to here. Okay, that's a long. Falls to there. Okay, that's also a long. It's likely to close above there and above there. So like this and this were great trades to take. I just didn't take the second trade. I got out of the way, let it bounce, and then I got back in here. Normally I would have longed and longed again, but the drawdown was too much. I didn't want to take it. So instead of adding on the second one, I just waited till it recovered. But appropriately, like longing here and longing again would have been a good trade. All right, you guys, I love y'all. I'm gonna get out of here. It's like noon already, so it's time to go. Barely squeezed, slightly positive here, but
because this is a really hard day. But can't argue with the greater bull market. It was good. We'll see you tomorrow. 2 o'clock for the Zoom call. If you are part of our membership, we do 2 p.m. Central, so 3 Eastern Zoom calls every single day. We go over our 20 days class. We teach everything we do in 20 days. It is life-changing. If you guys have never had a class on how the market works, how trading works, don't take my word for it. Go read what our actual customers say about stuff. Make a decision. We have a Black Friday thing going on right now. You come to the Zoom calls just for $20 for the first time we've ever done this. Black Friday, you can come to all of our courses, learn everything for $20. You go here, rocket.place/Matt. I'll give you guys the link. Go here, check it out. Invite you to check it out. If you don't like it after 3 days, full refund. And in 8 years of being here, we have never had one person ask for a refund after 3 days. Not once. You'd be the first. Come check it out. All the courses are here. 50% off first month. And read the reviews. Like all actual customers. Shows what they wrote what they said. And you can see what people have been saying about what it is we do here. There's a couple more that just came in. I haven't read these. Yep, check it out. We're the best for a reason. The best education in trading, period. Bar none. We're reinventing trading. We are picking up momentum. We will be the biggest thing on the planet as we continue to grow. Thank you guys for giving us love. And like I said, feel free to take a look at it. All of our stuff is probability based. All of our stuff is positional based. We don't use technical analysis anymore. We don't use multi-time frame analysis anymore. I never changed the time frame up here. We don't use candlestick analysis anymore. We basically completely walked away from technical analysis. And this new type of analysis pioneer is called positional risk analysis, created by 3 engineers, myself being one of them. And it's all about data. It's all about probabilities. It's all about trying to find legitimate edge in the market without looking at price action. So I love you guys. We'll see y'all later. And see y'all at 3. Zoom call today.